casual. It'll be sick. It'll be really cool.
And we're live.
Oh, hello.
Hello,
live.
everybody. We are live. Welcome to the Alfalfa podcast. We are for entrepreneur and investor friends seeking the edge in money and meaning. We are Eric Johansson, Arman Asadi, Steven Cesaro is back, and I'm Nick Urbani. Hello to everyone in the chat. What's up, cousin?
Ooh, we got a thumbnail
Rectum,
compliment.
Jensenius, Max. I saw Brett in there, first timer, he said, in the EU.
Welcome aboard,
Yeah,
Brad.
Welcome
late
aboard.
night. We appreciate it.
Thanks for dressing up, Steven. And credit to Steven on the
Yeah, you look very
thumbnail.
comfortable.
I am so comfortable. I'm angling for a Viore sponsorship for us.
Oh, I see
Comfortable is
that.
such an underhanded.
Playing the long game here.
Comfort Leisure.
Yes.
Oh, yeah.
What are we talking about today? We got a few things.
We're talking
but,
about this thumbnail, right?
Oh, yeah, the thumbnail. Melt
Whoa,
up
yeah,
thesis.
what is going on with the melt up?
Steven is going to teach us
We're melting.
what is
what
a melt-up?
is a melt-up thesis and how it might change your investment strategy. We also got a few things the other boys have been thinking about for the week. We got some Disney stock talks, some startup hacks, credit hacks, like almost semi-funding hacks.
Yeah, funding.
And then I got some P&L boring textbook business we might go through for fun. And at the end, we're going to have a little chat about Tim Urban's article called The Tail End. It's a pretty timeless piece, but I think it's timely for one of us, so we'll go through it. Support the pod by becoming a member or donating. You can go to streamlabs.com/alfalfapod. You can use the PayPal or the credit card option. It works now. Donations $9 or over. Your comment that you put in that donation box will show up on the screen. So feel free to have some fun with it.
Unless you use bad words.
Yeah, 4-letter words.
No. As part of our software strategy session this weekend,
we turned
you
off
remove
our
the
software
filters?
team. We removed the filter.
Oh, great.
So you can
nice.
actually curse on screen now.
Oh,
Yeah.
You can demonetize
Should I have
us.
had that? I don't know if I should have said that, but I felt proud of the accomplishment of finding that.
I think the
setting.
revenue from the donation will outweigh the demonetization.
YouTube
at this point.
monetization is probably not going to work for us. Let's be real. I did turn that on this weekend too. So
Let's see if that does anything.
super chat and all that.
Yeah, that link and all the other links, subscribing to all platforms, are at alfalfapod.com. Some quick announcements. Maybe, probably, most likely, no pod next week. We're all gone. So
I thought we were going to have a little special.
we may
pod.
do like a insert an oldie but goodie
Okay.
in there.
Could be a newie for someone who hasn't heard it.
That's true.
Yeah.
That's
We
true.
should just
So
have
Yeah,
a
don't
pod in the
sleep on the
house.
week.
Just like
I think
gather everybody around a microphone. And
it's
see what
audio
happens.
only, but it'd be cool if we went back like 2-3 years and did one of the podcasts the four of us did on your podcast
God,
on
Tipsy
Flow.
Talk?
Tipsy Talk. There was a pretty drunk talk.
We should do that.
But maybe
That'd
we'll
be hilarious.
upload that one. That'll be fun.
Yeah, I don't think people have heard that.
I don't think I remember any of it.
I definitely
that'd
don't
be
know.
Really
if
cool.
I don't remember it.
You're right. Most alfalfa people have never heard any of those. So.
Yeah. That
yeah.
could be a good one to upload. Eric's going to be in Turkey. Can I say where you're going to be?
Yeah, because I, as of today, am officially joining Techstars.
Cheers,
Ooh,
bud.
Accelerator.
Clap, golf
yeah.
clap,
Thank you, man.
cheers.
Oh, that was a secret?
It was a secret. And what, did you know?
Good thing I don't update my blog.
Yeah. No, literally, as of today, due diligence complete, documents signed. It was quite a due diligence process. I'm very impressed by everything I see so far. And next week, the first ever inaugural San Diego Accelerator for Techstars. So
Congratulations, my
yeah,
friend.
man.
It's
Pumped.
a
It's
lot
gonna
of
be
work.
intense. It's gonna be intense.
Like
but
a lot of applicants.
That is
and
very
there
cool.
were-
You had like it was like a 0.1% acceptance rate or something crazy.
it was less than
wasn't it?
1%.
That's insane.
Yeah.
So good work, hard work, but more hard work to follow. So we'll try to fit you in as many.
Yeah. And
Uh,
apologies in advance if I, lack in attendance, but hopefully I have more to share.
Yeah, you're gonna get a ton
lot
of
of growth as a
alpha out
result.
of that.
Yeah.
It'd be cool if we got a little few founder interviews with some fellow tech stars
Totally.
in there. Would be cool.
When community investment round?
Well, let's get it going, man. I like that idea. Oh, in Steno? No, I don't know about that. I don't know if I need that. I don't know if I need that.
You want 1,000 of the
That's more
shareholders
pressure. That's more pressure.
every week, just
I thought
like
you
when
meant deals-
Steno update.
Can you imagine my Discord notifications?
Hey, how's my $400 investment doing?
Yeah, I don't need that.
And then to round out, Steven and I will be at Permissionless. So that's why we will miss a live next week. If you are going to Permissionless, you listen to this podcast, Two Concentric Circles, go into the Discord and go into the Permissionless channel. There's a little invite for you to our little happy hour. Should be fun. It's on Tuesday, September 12th from 6 to 8 p.m. Heard we maxed out the Partiful invite already. So should have some solid
There's a
attendance.
limit?
I guess so. But
Huh.
we'll fit every listener in for sure. Okay, that's done with announcements. Steven, what have you concocted for us today? I feel like we've been
I
spoiled.
brought old fashions.
And
Yeah,
can
everybody
you-
was really phoning it in, just bringing a bottle. So I went above
Phoning it
and beyond.
in?
I went. I
What?
picked up some
Did
nice
you just
ice.
shit on every previous round?
Time he's gotten free alcohol?
Yeah.
I went to the bartending
Whoa,
supply
easy,
store. No, I bought some. I didn't have a cooler. I looked for one, so I just
Studio's
brought a
a
bag
rental,
of.
it's fine.
This
Yeah.
is real. This is cocktail ice.
Shouldn't do that
Dude,
for the
this
landlord.
is Italian imported hardwood, brother. What?
Yeah.
Just dripping all over.
I am for sure slipping on this floor and breaking an ankle. Later. And,
No, we definitely.
By the way, we
appreciate
received a
the ice.
Loom video from one of our listeners about bourbon recommendations. I don't know if you listened to it, but you, in fact, picked his go-to.
well, I
bourbon
am
whiskey.
a bit of a low key bourbon aficionado, so I,
Okay.
I know things.
Okay.
So you whipped together an old-fashioned for us.
I did.
Lovely.
I did. I even bulk made some here for later, which is
Should we
probably not going
share?
to turn out well.
Is Bob? Is that his name? Should we share Bob's Bourbon Alpha?
That's the
Discord?
Bourbon Alpha. Elijah
It's
Craig,
Elijah Craig.
is your like daily drinker, if you
Okay. Yeah, daily.
will. Okay, let's give a shout out to our sponsor, Zbiotics. Thank you very much. Go to zbiotics.com/alfalfa for the discount code. It's 15% off your first purchase with any email address. For the price of one drink, you can make sure all the other drinks don't hurt you in the morning. Jordan, if you don't mind, can you spam a link in the chat if you don't mind? There have been a lot of stories in the Discord of Zbiotics saving some butts, so I thought I'd share a few.
Oh,
Testimonials.
Wow, testimonials.
So
Spoken
Tom
like
Nom
a
Nom,
true e-com expert.
it says, what the fuck is this Zbiotics black magic? I drink my standard death pours, and I feel great.
Death Force. Attaboy, Tom Nom.
To do, Mo do. Just got from Aruba. Took 24 bottles of Zbiotics for the crew of 8 for the festivities. Huge shit with the team. Even the TSA agent that flagged the bottles was down after a little explanation of what it's supposed to do. I'll leave out the rated R content of that. I hope you gave him the Alfalfa code to do Mo. It's Beef says, I was very skeptical of Zbiotics, but tried it for the first time this weekend. It definitely helped a lot. And Eth Beneder Scrooge, he was talking about the night
is this the
before.
one on Twitter?
Oh, I didn't even mention the one on Twitter.
There was some good banter on Twitter about it.
There was
too.
good banter.
Yeah.
But he mentioned, he's like, I'm going to put it through a test. I'm going to
Yeah.
have X number of drinks.
Well,
I have a
he
6:15
shared
morning.
his results.
And he said, Zbiotics is not 100% panacea, but it definitely does help off to my 6:15 a.m. meeting. And I think that's the real alpha is that,
What else could you ask for?
yeah, you still do your shit in the morning, get your
Yeah.
workout
Dude,
in.
Rectum had like 8 shots and 7 or 8 drinks, and he said he woke up and
I'm
hit
sure
it
he crushed his quad
at
workout.
like 6 o'clock or something.
Those calf raises were
I heard he consumes
All-time
like
highs.
400 grams of protein a day. Eric was telling me.
What a maniac. What a maniac.
Is this
12
true?
cans of tuna. 12 cans.
No, that still won't get you
It
there.
doesn't even get you there.
let's see. Tried my first round of Zbiotics and it was great. Just woke up dehydrated, felt great. 0x Bread Guy, thank you for the comment. Oh, Tom Nom Nom's here. Drank like a teenager on an adult budget. Thanks, Bio Nerds.
Bio nerds.
From the bio
that.
nerd himself.
So
This is
anyway, zbiotics.com/alfalfa is where you can find the disco code. Use alfalfa at checkout, and that is it.
I bought a 12-pack last weekend.
Yeah, we have to, Steven, we have to buy some for permissionless for sure. Like a lot.
You guys are leaving soon. You got to get on that.
I know. Today's Wednesday. We leave Sunday.
Yeah, you got to
We
get
should
on
do
that,
that now.
today.
Yeah.
Yeah, yeah.
I haven't,
Steven-
I haven't bought a plane ticket yet.
Steven can't
Fucking
even.
hell.
Steven just can't even. We all know this.
Yeah, we know you can.
Wow, you're gonna be back row, middle seat.
Oh yeah,
You're
that's
screwed, brother.
Yeah, you
I
like
don't
it
care. I'm so poor right now. I need to.
Okay. All right. That was
been a
great.
rough-
I like those little
been a
shares.
rough
Nick.
Yeah,
summer.
those are fun, and we've been getting them every
There's
week.
so many
So
of 'em.
might as well share them. Better
Yeah.
than reading out some.
So
ad
what
script.
happened is there was a bit of banter on Twitter about X about this, and I think what was really interesting is just like the way people look at any sort of alcohol
Helper.
helper is that they're usually like a sham of some sort. And people have just been burned so many times by these so-called, alcohol helper, remedies out there. And so a lot of people are surprised because it's the first. That's why we were surprised,
Yeah.
right? It was like first thing that ever worked. So, yeah, I think it was an interesting little back and forth. I think it was OX Bread that was having the convo actually on Twitter about his little.
So let's leave Steven's melt up thesis for last in our little money section. So
okay.
who wants to go first? Got a little Disney talk,
Oh yeah.
startup
Disney.
talk.
I can warm up with Disney.
Well, yeah. Let's start there. Did you
Okay.
guys? I don't know if you guys watch television, but I watch sports and stuff. So
I don't.
Univision?
I don't watch television. Should I just go to the bathroom?
yeah.
Television, Univision,
Yeah.
like
Televisor.
cable.
Like cable TV. Like I watch sports.
ESPN, right?
I have
ESPN.
YouTube TV. Does that count?
What is sports?
So yeah, what are sports? Did you guys see that Disney is having a feud with Spectrum Cable, like Charter
Yeah.
Communications?
Disney's having a feud with everybody.
I saw this morning on Morning Brew.
I thought Steven
So
would
I'm
like
getting
this
caught up on
particularly
this.
because it's like a very much like a go woke, go broke kind of conversation
Okay.
that you love, just shitting on Disney.
I do like shitting on Disney.
But like
They deserve it.
so they pulled their content off of Charter Communications cable TV. So like I'm a subscriber. I want to watch ESPN. I want to watch ABC, like college football. You can't watch it on ABC. You can't watch ESPN. I think they also own Discovery, National Geographic Channel, a couple
Wow.
other channels. They just pulled all the content off of cable TV. And I was wondering what you guys think about this because on the one hand, like I just want to watch my sports, but then I'm thinking about the business sort of ramifications. Like, who do you think holds the leverage in this situation? Like Disney creates the content, or they own the content, and they sell this to the cable provider. The cable provider sells subscriptions to consumers. Charter Communications pays Disney $2.2 billion a year
Whoa.
for the content. So Disney is foregoing $2.2 billion of revenue right now. That comes out to $6 million a day that they're not capturing. So go woke, go broke.
So I'm curious. Like when you were like ESPN is not on my channel station. Did you? Are you a Disney Plus subscriber already?
Yeah.
Okay,
But with my Hulu, like I have the Hulu, Disney, and ESPN Plus bundle.
Yep.
And I still can't watch regular ESPN or ABC.
Because ESPN Plus is its own thing.
It's its own thing. So it's
Yeah.
all siloed.
So you had no place to get.
Right. And then like I go to a bar to watch my sporting event.
And it's all kind of coming down to Monday Night Football, right? To see like people don't know
Yeah.
like what's going to happen between
it
now
all
and
like
then.
I think it's okay for now because it's like we miss like the Florida University football game,
Right.
And that's like a big deal. But a bigger deal is Monday Night Football, and that is on
No, this
ESPN.
is huge.
So if
I find this whole thing really fascinating.
if like I think Charter Communications has 32 million subscribers. 14 million of those are like cable TV subscribers. The other are just like broadband, like cable internet. But like if 14 million people can't watch Monday Night Football, I think there's going to be like mayhem in the streets. And I'm wondering like,
well, they can.
I still can't
They
even
gotta
tell.
they got to get themselves a little Disney ESPN Plus.
No, but that
you
doesn't
guys
work.
know the internet's
ESPN
a
Plus.
thing, right?
ESPN
Yeah,
Plus
but
doesn't work. I have it.
Doesn't work.
You can't watch regular ESPN on ESPN Plus.
Okay, where can you watch regular ESPN?
So like
Maybe
the-
I misunderstood.
Cable subscribers like myself have had to resort to like signing up for YouTube TV, Fubo TV.
Okay,
Basically
so you have to
another
go
whole
through a
subscription.
different cable/internet
Right.
TV channel subscription
because
service.
like in our
So it's
region,
not available
in our region, Spectrum Cable is the cable provider. So
Yeah.
it's like you can't just like even switch over to a different cable provider. You got to go like internet based.
Got
But then
it.
I'm thinking also like, but who owns my internet is fucking Charter
So,
Communications.
Yeah, Tyler has a good question. Were you mad at the cable company or Disney?
That's like Tyler, great question. Am I mad at the cable company or Disney? That's like what I'm trying to wrap my head around is like who's at fault here? And I think it's both, but like probably the cable company. What I've learned is that they're trying to. They're both holding each other hostage essentially. Obviously, cable subscriptions have gone down over the last 5 years. They've lost like 25% of their subscriber base. Everyone's like cutting the cord. But I don't know. Like at the end of the day,
$2.2 billion in just one. In my mind, it's always the distribution channel that holds the leverage.
so they're holding Disney hostage.
Yeah, I mean, I think they hold the most leverage. Like, and for Disney, like the
Well, I think
content
we're
is
finding out, right? It's
this
going to be interesting.
fixed cost thing. They're producing the content, and so yeah, they need that additional revenue. to
Why
help.
do you feel that they have the leverage?
Because Disney can create all the content, but it doesn't seem like they have another distribution channel
Disney
right
Plus,
now.
bro.
Yes, but that same content isn't available.
I'm saying I'm a Disney Plus
No, but-
subscriber
but-
and I
but-
can't watch.
No, but
still.
that
see, I wasn't
would-
listening to that
That
part.
would be like they would integrate it somehow, and like that is the decision that they're making. They're basically saying you pay us what we think we need, or we'll go and find a different way to distribute this and feed it to customers.
I mean, that's
right.
Yeah,
Like they would integrate it, or they'd bring it to ESPN Plus, or they do something
I agree.
beyond just
And, like, I think-
we're just going to lose 14 million people.
like,
They're
one
not
thing-
going to let that happen.
I agree. One thing I've thought of though is like, everyone's cutting the cord, right? But the cord for me still exists. Like I still have cable internet subscription through Charter Communications, right?
Why though? Is it
Well, like, what else would you guys
Why
use?
do you not have YouTube TV?
No, he's talking about his internet.
No, so like,
So you have your internet,
need-
and then you added
even
the
to
cable.
go to YouTube TV, you need an internet provider. and
AT&T
Charter,
fiber.
Charter Communications is my
You
internet.
don't have
provider.
fiber?
It just
No.
happens to be his internet.
Why don't you get fiber?
Well, yeah, AT&T. Is
So you have an
amazing.
alternate solution by going fiber, I guess.
Yeah,
Yes, you get
And
like
it's so fast.
1,000 upload. You're welcome.
it's so fast and cheap.
Yeah,
It's like $50 for
problem
like
solved.
500.
I think both of these companies are absolute
Megabytes.
trash,
But it's-
and we should
it's-
just short them all to zero.
I mean, yeah, Disney stock is in the fucking dumps. This turnaround has not been
Right.
turning.
So that's my
Yeah.
other kind of take is that you have like what's actually happening, and then you have the consumer response. And to Tyler's point, like who do you get mad at? I find that consumers are getting pissed off at Disney, even if they're not the one who's like
Yeah,
I like
holding
the
them
analysis
hostage.
of like imagining this as a secession episode, though. Like that's where my brain is immediately going. I'm just imagining the phone calls. I'm imagining the back and forth between these two companies. I'm imagining all the proxy players involved and like how people are playing this, and that to me is really fascinating. This is a multi-billion-dollar deal. I can imagine a very, very stressful, high-stakes situation right now. That's where I like to go there now with this stuff in general. It's like after having seen Secession, at least, I'm just imagining how this plays out. And while I agree that the cable companies still have some sort of stranglehold on the market because of the distribution, because a lot of people still today struggle with the idea of cutting the cord and moving to something like YouTube TV, which I think is the preeminent winner. I think it's the best service. I think it gives you everything you need. And like Edmund is saying, it has all the sports, it has everything. You could do it through other alternate sources too, but the older generation finds that a little bit more challenging, difficult, not really comfortable.
It's like one
they'll
extra
do
step.
it.
Yeah.
Yeah, they'll do it, but exactly, it's one extra step that I think they're like, I already have this relationship with my cable company. Like, just make it easy for me.
It's-
So we're at a huge
You just reminded
crossroads.
me. I really have to cancel my
crossroad.
YouTube TV. By the way, this is the best thing about YouTube TV that people don't talk about. It is so easy to like turn on and turn off. Like if I had to cancel anything with like Cox or somebody, I have to pick up the phone and call like
Oh,
a
yeah,
human.
horrible.
That's
And
right.
It's just like the worst experience.
they're gonna
ever.
like try to
it's-
convince you
But
to
like
like
YouTube TV is like you just go to a website and you turn it off, and then when you want to watch some sports, like this is gonna be a big month, I like resubscribe.
get one
again.
month. Yeah.
Yeah, it's great. No, I bought it for the Bachelorette, but
Yeah. Of course you
Um,
did.
Yeah,
it's over now.
I
so.
saw.
Don't watch it, and I just have it on, and that just shows how
The Bachelorette?
No, YouTube
You
TV.
just have it on the background. It's like a little background
YouTube
music while you
TV.
work.
I need to cut some
I
subscriptions.
saw Barry Diller. He was commenting on the writers and actors strike, and his advice to the big studios was cut Netflix, cut all these streaming companies out of the negotiations, and just get it done. Like they're your enemy. Cut them out. Work directly with them. Don't make sure they don't have any say. He also went on to say that he thinks people should double down on these cord, old school.
The old school.
Because like he thinks that basically the distribution will the rate of decrease will slow down, and it just provides like a cash cow. Like you should focus on those distribution channels while still growing your subscriber base. But I imagine for Disney Plus, like their customer acquisition costs must be through the fucking roof, and they're hoping on like a long LTV, and it must be massively negative if you just pull that out on its own P&L. Probably doesn't look so hot, and probably that $2.2 billion is like that cash flow is funding this business. But what greater like PR if you literally just cut your content from, all these distribution channels, and people are forced.
I don't know. I
do
feel
it.
like people are feeling alienated because I'm kind of on. I think Steven was early to this yet again. Like I'm feeling like I see Disney as kind of like the Bud Light scenario. It's just like alienating its like core user base. And
Dude,
I'm just like,
I'm so mad I missed that trade. Like when Bud Light did that, Bud Light and Target, I was like, oh, they're dead. As soon as I saw it, I'm like, they're dead. I just knew they were dead. My family is those people. Like I went home a couple of weeks ago, and people were talking about like if I bring up Disney in front of my family, just hate it.
Really?
Yeah, they just shit all over it. Like this company is alienated like almost half the country. It's like a weird phenomenon where I feel like a lot of these companies don't realize that they've like shat upon half of their customer base yet. Although like the stock market has sort of realized it, and I like wondered the ramifications of this going forward as like a sort of investment thesis, because there's a lot of people to sort of
Can we have a short?
shut out.
Can we have a short politics sidebar on this?
Like right now.
Yeah, right now. Are you ready?
Yeah, sure. What's up?
Okay. So do you think that is avoidable? Is it possible as a company to be agnostic and truly circumvent being judged and dividing and having a customer base determine if you are for them or against them in today's age? I'm really looking forward to watching an episode of Eric Weinstein that I saw come out recently about how truth is, it's one of those conversations we love to have, like truth being up for grabs, no objective truth. They avoid it at all. Any opinion they have, any decision they make,
Okay, let me
everything is
ask
so
you a
political.
question. I know where you're going.
I want to know
Like,
what you think about that.
like imagine like the closest 100 people you know. How many of them would be upset if Disney like had too few gay characters in cartoons? To the point where they would like cancel Disney.
How many that I know?
Yeah.
Probably a good amount.
if
Like
they
I'm
didn't
not
have-
saying like I'm saying like too few. Like there's like some
Probably
slight
a good amount.
underrepresentation. You think they would literally just stop watching Disney
Well, that's
altogether?
like a passive act. It's not a
Yeah.
active act. So if they were like, we're not going to have them, then they definitely
No.
cancel.
There's a difference between Disney
Right.
being like, we're not into the whole gay thing, so we're just going to
Sure.
write that out. That would obviously be a terrible move, right?
Yes.
But Disney's they've gone so far that they're like actively pandering, where they have an opportunity to just like be like Switzerland in a way and just sort of sit back.
So you do think that they could be Switzerland?
Absolutely. I think that there's only 5% of their customer base like cares so much that they would like adamantly cancel, boycott, or whatever if there was just like not like a pandering to them. Like I'm not saying
Yeah.
Disney should like pander to the right. I'm
Yep.
just saying like they shouldn't pander
Well,
to
like,
like the
Bud
far
Light
left.
could have not had that opinion and had that advertisement.
They could have just
and
stuck
could have
to
avoided
their
everything.
their
Yeah.
wheelhouse, which was
their
like
lane.
Well, the
uh,
Bud Light thing is that
beer
was just
and
an issue
horses.
of
Football
like
and
chain of command in the corporation. Like some manager approved the thing, and it's a big company, and you don't see it. And by the time everybody notices it, it's too late. It's going
Yeah.
viral, and then your customer
It
base
seemed
hates
like
you.
a good idea, I'm sure, at the time to them.
So,
Like a
do you think there's like
marketing
an
blunder.
equal and opposite to the term "go woke, go broke"? Do you think there's like also like go woke and like get paid? Like, is there also that?
There was.
Yeah,
This
there's
is
go
the
there's go woke
counter-reaction.
and get paid. Like if you started with like a tiny market share and you were able to jump into a market and capture a bunch of customers who are like feel disenfranchised from the right end of the spectrum, right? But if you start from the point where you service the entire population, like all of the kids and parents in the country basically like Disney, then it's obviously a bad business decision to like plant your flag in either the left or the right because of the current political
This is
climate.
correct. This is correct.
You're just gonna
But
you're gonna incinerate
coming from
half
zero,
your market
you can
cap.
go rich very quickly.
No, it's a great strategy
It's
if
a
you're
great
like some sort of
strategy.
niche company and you want to go from nothing to like capturing some part of the market.
Yeah.
But if you're a brand that serves everybody, it seems like really bad. And there's probably more of these plays like in both directions, just from like an investment perspective, where you can probably short some things or buy some other things.
Okay.
I don't know what those are at the moment, but like
Yeah,
I wouldn't touch Disney stock with like a 10-foot pole, just from my experience interacting with people, you know,
Yeah.
in my
Hell of a
social
stock,
circle.
though. Has
like
been a hell of a stock.
I know exactly what they say about everything and how they feel.
We've got
and
some great
they,
assets,
like don't
like-
like
Oh,
Disney.
it's been
There's a
it's
price-
been one of the highest performing companies
They're
in the
trying
last
to peel
decade,
off
man.
ESPN.
ESPN's going to be sold off, but like there's a price at
ABC.
which you'd want to own Disney. Like, you know, if you're saying that it's like maybe too high price now, they do have great assets within that company. There's a price at which you'd want to own it.
Yeah.
Mm.
Thank you, Steven.
You're
Cool.
welcome.
It scratched my
I'll talk MANU.
yeah.
Yeah.
You want to talk a little bit about MANU?
Oh yeah, we can do a little victory lap. Manchester United. Well, I guess it's like a victory lap in that we correctly identified.
You bought the bottom, you sold the top.
Yeah, and that was cool.
Well done.
I think we identified that
Kudos.
they're not going to sell that business for anything less than an astronomical.
Yeah, so I don't
Dollar
know
amount.
when it was, like 6 weeks ago, maybe 6 episodes ago. I forget which episode it was, but I think like 3 months ago you said, "Hey, I like this stock. They could potentially have a chance to sell." You said this is what the market's valuing at. Here's my back of the napkin valuation. It was clearly undervalued. Stock started to go up. Started to realize that value, and then I think I don't know how you.
Well, some of the Discord members like played that trade and talked about the call options they bought and made
Yeah.
some money on that. I think I want to open up a little options corner about this because how I played this just recently. I think on Monday or Tuesday, Manchester United, the owners said, "Hey, we're not actually going to sell the business anymore." So the stock tanked. It dropped like 20% in a day, and in the options game, you look at something like that. That's volatility. Like. I look at that and I say, perfect time to sell puts. So we talked about the valuation before. Manchester United is valued at like 4 billion enterprise value today. Probably undervalued slightly, but I'm selling the 16, 15, 14 puts, the 16 strike, 15 strike, 14 strike puts, getting paid on those because like volatility is high. We know the Black-Scholes model pays you for volatility. It's a
Right.
huge lever. So I'll just take any opportunity like that to capture some premium.
And how did you know, like 5 or 6 weeks ago, that you're like, "Hey, I just want to give you guys an update. I'm out on this because it doesn't look like they're going to sell it." But how did you?
Well, I talked to you guys about it. And I said, "Would you guys sell in this environment where we're spending $1 billion? Like Saudi is offering $1 billion to one player, Kylian Mbappe. They offered $1 billion to come play for like 3 years." I'm saying, I think we just talked about it. We said, if you were the owners of Manchester United and they're offering $1 billion for one player, would you sell your whole franchise for $5 billion? Probably
No.
not. Probably not. And
Cool.
I think we land on the same place. But for me, this was just like it's more of an options play. Like I think selling Manchester United's right now $19 and change. If you're able to sell puts at $15 strike, I'm getting like $100 per contract.
Ooh,
That's juicy.
juicy.
And another thing about options too, like these things get extra juicy when a stock's price is very like low in terms of like just that unit bias. Like a $15 stock, you're on every contract, you're on the hook for 100 shares. It's only $1,500 if it gets put to you.
Yeah.
So like you can just load up on those. It's a great
Lovely.
return.
Well, anyway, I just want to bring it up because it had a big move yesterday, and you made a good call on it. So.
Yeah, we like to celebrate our wins.
Yeah.
You remember when the
We
Saudis
should
were
do a better
bidding?
job of
Do
it.
you remember the Saudis bidding meme from last year in crypto?
Bidding on Bitcoin.
yeah, that didn't happen. They're just bidding
Salute
on.
emoji.
Yeah, they're just bidding on soccer
Not
players.
yet.
Yeah, they went full sports, man.
Yeah, they went the other direction.
I think it's more timeless. It's less cyclical.
If they could just allocate a couple of players to some buys, just a couple
of players
just a
to
couple,
Bitcoin?
just a few billion.
I mean, they're floating that $50 billion raise for Saudi Aramco. They're going to try to sell $50 billion worth
Really?
of stock. They got to do it on the Kuwaiti stock exchange, so it's a little weird, but I think.
I remember when I was looking at that, it was like the most valuable company in the world.
It is.
Yeah.
Yeah. It's private, so
Yeah.
hard to value, but. All right, let's move on. So you want to go through some startup credit tack?
Yeah, I like the corner.
Options
terminology
corner?
There.
Options
We're
corner.
going startup corner. Something that I've been
it's more like
working on
options
a lot.
wall. It's a startup corner.
Something that I think is really interesting, and definitely some alpha there, and that I've been working on really closely. I always allocate like a certain amount of my time running my company toward this. There are a lot of incredible like perks out there, and I think that this applies to, and by perks I mean like credits that you can acquire from the types of software and tools that you need to run your company on a day-to-day basis.
So what are
that
some
can
examples?
Save you millions of dollars. So like your email service provider, like your hosting company that you host your website on, or you have your database, you
Servers,
could
right? Like
be
AWS, Google
AWS,
Cloud.
Google Cloud. This could be like Segment, where you funnel all your data. It could be like
Slack
Mixpanel.
even, right? Oh, yeah, Mixpanel's a
like
great
where
one.
you understand user engagement and metrics. It could be Slack.
And you
Absolutely.
can get this for free.
You can, if. Do you guys know the concept of the third door?
Oh, dude, we met the author of this book.
Oh, you were with me, yeah.
Yeah.
He's a good friend.
We were at what conference? It was like a
We were at
retreat.
Summit.
Summit in Tulum, and it was a bunch of guys, and we sat next to this guy. He's like, I'm
Yeah.
writing a book called The Third Door.
Yeah.
And if I remember correctly, it's like,
He's like a famous author now.
yeah, the
He
first.
hadn't published it yet.
What?
When we met him,
Oh, yeah, he hadn't published
had
it yet.
not published it yet.
So the first door is like the common door that everyone takes, and then there's always like a side door that you can get into the
Second
the
door,
club you
VIP.
want. Yeah, VIP.
pay extra.
So hold on. You're talking about a way to like talk to somebody or
Talk to someone, get in
To
somewhere.
get anything in life, to be successful. Like he analyzes the story of all the great thinkers like Steve Wozniak and Oprah Winfrey and whoever, and looks at the commonality and determines after these interviews that they all utilize the third door. And the third door is the one that is invisible to everybody else. It's climbing through the kitchen window of the restaurant and sneaking in and grabbing a seat. It's not paying the VIP. It's not waiting in the front line. And every great leader.
So hold on, using
uses the third door.
your example of like AWS or whatever, how would you access the third door there to get the?
Yeah. So I bring up the third door because I think that it's a prerequisite to entrepreneurship. And if you are not the type of person who's going to be resourceful and willing to be embarrassed and willing to take risks and willing to be a little bit cutthroat in your devotion toward getting results and being resourceful, I think that's like a high reason like that you would fail. Because if you're walking through the first door, you're standing next to every other Joe and like you're fucked. Like you're just like you're at the back of the line. And if you think that you're going to do it with money and resources, then you need to go and make or raise at extreme valuations and have $20 million in the bank so that you can go and pay to be at the front of the line and get the tools that you want, the way that you want, and or not worry about budgets. So the way that most entrepreneurs need to roll, that most founders need to roll, is they need to understand the third door. So once you understand that, and great book, by the way, the author's name is Alex Banayan, and it's called The Third Door. Phenomenal read, very inspiring. I remember when we went to New Zealand, I gave it to one of our friends, Jason, and he was like, dude, this fucking book was unreal.
Yeah.
So there's a lot of credits out there, and one of the things that is very actually frustrating is that a lot of the large companies out there like Mixpanel and Google and Amazon reserve their free credits for companies that are venture backed. So I always found this, and I still find it really backwards. they ultimately are only giving the $100,000, $50,000 in credits to the ones that went and raised money from the prestigious venture capital funds to then come to say, after you've now raised your millions of dollars, we'll also give you credit.
Yeah,
It's
yeah.
like, wait, who are you trying to help here?
The ones that are well funded.
The
Yeah,
ones
thanks.
that are well funded or the ones that really need it?
Yeah.
It's very backwards. So before I, as of this week and Techstars and all these things, I have spent the last 2-3 years playing this credit game. And the way you do it is that you look up these different companies and the tools that you want to use. And oftentimes they do have a publicly facing startup program. But what it generally takes is obviously applying, but getting in touch with those teams and asking for exceptions. Part of the third door is to learn to ask people for exceptions, to ask people to be human, to tell them your story and be like, hey, I'm Arman Asadi. I started this company all by myself. I've put in this much money into it. I'm really trying to make it. We have a small budget, blah, 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 and was wondering if you'd be willing to, accept us into your credit program for a year, so that while we get funded and while we make some progress, blah, blah, blah. Tell your story. Have ChatGPT write your goddamn story. I mean, that's the easy part.
Don't
But
do
the
that.
hard part is having the courage to step up and take action and get these things. And the reason I'm telling you to do this, because first of all, this is not just for startups, right? There are so many people out there that just want to have some kind of a side hustle. They just want some credits from Shopify or some credits from Stripe or some credits from whatever it might be, their email service provider. You can save hundreds of thousands of dollars.
You got to give some of these examples that you.
Well, like
Yeah,
who do you
SendGrid or
Well, who do you like reach
know.
out to? Like who? Like is it an
the
email?
team. Yeah.
Is it an email?
Yeah.
Typically?
I mean, me,
Yeah.
I hit them on Twitter. I hit them on email. I go to LinkedIn. I look up people that work at
You're
the
finding,
company.
like, the individual
Dude,
that
I got
makes the decisions?
$100,000 from Google when I shouldn't have. I probably was in contact with them. Dude, first I went to my old friends that work there. They were like, no, we're not in Google Cloud. Then I went to our current friend
Yep.
that works in Google Cloud. He connected me to somebody. That person was like, no, you're not an A16Z. You're not in these VCs, so we can't give it to you. I'm like, fuck you, man. So then I went to another person and another person and another person. And then finally, I don't even remember because I made so many chess moves, I got it. So
And you got
just have to be
$100,000.
willing- I got $100,000. So we used that toward GPUs in the cloud and AI and infrastructure to scale our company. We used it toward all kinds of things. Like, it's been huge for us. So
That's pretty nuts.
you can,
actually.
it's out
Yeah,
there.
it's-
You just have
it's
to
wild.
push. You just have to go. And some of them, like I said, are publicly facing. You don't have to go and network. They're available. You just have to look. Azure right now has
I'm sorry, what?
dude, that's I'm sorry. No, I'm really sorry. I should never ever say it like that. Can I even say it now?
Say the line.
Has
Say the line.
Azure has like you get 10 for free right away, and they have a system where, and by the way, if you go through Azure, you're basically getting OpenAI credits, right?
Yeah.
You're getting access to OpenAI, you're getting access to hosting infrastructure, cloud, all kinds of things through Microsoft. And you can get 10 right. They have a rolling system, so they just want to see that you're using it. You can go right now, go look up like, I can't even do it anymore. You look up like Azure for companies for startups, and you'll see the page. It's like, start using, we'll give you 10K. You show some usage, we'll give you 25. You keep using, we'll give you 100. And they're like a little bit more lenient about who's funded you and things like that. You just have to show that you're utilizing it. Mixpanel, $50,000 you can get right now. Mixpanel.
Well, let me ask you guys. You guys are like the entrepreneurs in the group. Like, is that sort of like the drug dealer sort of giving away
totally.
a dime
I
bag?
mean,
be like, here you go, here.
It's a drug
try
dealer,
this.
crack dealer
Like,
approach to marketing. We
Yeah,
always talk
yeah.
about it. Like,
Yeah.
you get them hooked on it because, like, at the early stage, you're building out your infrastructure, and the switching costs are incredibly high. Like, even like something like Slack, you just
Yeah.
build your internal communications off it. And I think they're like, well, these venture-backed companies, they're probably going to grow, and once we get them hooked, they're not going to be able to get off. They're going to have other things to worry about.
They're also going to have the money.
Yeah,
They're
to
betting
pay for the bill when it
on
comes.
most of these companies becoming successful
So that's
enough.
why they want to fund the VC back, because it's like, well, there's more behind that.
Yes.
Yeah.
Yes. That's
So
exactly
it's a brilliant approach, but it's also for the taking too. And they're happy to give it to you, but you got to use the third door.
Yep.
Okay. Cool. So Stephen was asking, the reason we came up with some of these topics is like Stephen was asking us like, well, what are you guys doing this week in your personal lives?
Yeah, he was like, what's going on in your world?
Yeah. How are you guys doing today?
How are you?
And
I care.
Eric's
Yeah,
like,
I
well,
care,
I'm thinking
guys.
about Disney stock, and Armand's working on some of these credits, and I was like, well, I don't know, I'm just managing from the P&L like I normally do, and so I figured I'd give a little run through of kind of what that looks like. So I typically manage from the P&L.
Ooh, are we screening?
Can we zoom in?
Ooh.
Yeah, we got to
We have
zoom.
a
Yeah, we'll throw
live-
this up in a
live
second.
P&L.
Is that a P&L?
It's not a live one. It's a mock one I created.
Oh,
Come on, give
But
us
they're
a real
so
P&L.
closed off.
Yeah.
Pro,
God.
pro forma.
yeah.
I would never fucking do
Jeez.
that.
Man.
So
called
Just add
vulnerability,
3
pal.
zeros, everyone. Just add 3 zeros.
you're gonna have to add more zeros than that, bro.
Oh,
40.
I love it.
$41
Oh, you went with
in
$100
expenses.
gross
Okay.
revenue? Yeah.
All right, so
Come on.
So if you're starting out, you're probably managing from the cash flow statement, right? Because you're just starting out, you're trying to make ends meet. Or if you're in wartime, CEO switches to managing from the cash flow statement. Fuck the P&L, just survive, right? And I've had,
I feel like that's the first time we've mentioned that. You have to define wartime, peacetime, siege.
I mean, dude, wartime could be a bunch of different things. Like you're getting just shellacked in the market. Like you had a massive revenue drawdown. You're on the verge of doing a layoff, or maybe you're about to do a layoff, and it's wartime. And you literally, usually that time we have like this monthly, or like a 13-week cash flow forecast. It switches to a fucking daily. I've had that moment where it's like, wow, things are getting tight. We're switching to a daily
Wow, you go to the low
cash
time
flow
frame
forecast.
That
yeah,
is
low,
the battlefront. That is
yeah, and like
the
who
1
cares?
minute chart.
wartime.
Who cares about the P&L and when revenue is recognized and expenses are recognized and EBITDA? Fuck that.
accrual accounting.
Yeah. Is there enough cash? And you're often doing that in the beginning as you're starting out. But like you said, like could be a recession, could be something happen in your business. So this is not for wartime. This is for when you might have like a business that already exists. So Jordan, you can throw up that mock P&L up on there. So let's do a basic run through of this. So basically you have revenue, and you might have things like refunds or adjustments. So you have net revenue there. Every business got some kind of cost of sales or cost of goods for this. It might be merchandise purchases or your fulfillment if you're sending physical products out. Could be like sales commissions or referral fees you're paying if you're a different type of business. And you take that net revenue minus that cost of sales, you got your gross profit, right? Next, you have your variable expenses. So these expenses go up and down with your revenue. So a typical thing might be your growth engine, like advertising for some businesses. The more you advertise, the more your revenue. The less you advertise, the less revenue you might make. Other things that might go up and down with revenue, payment processing is kind of like a common one. As your revenue goes up, that goes up with it. Could be product software that's volume-based. Like, I don't know, Mixpanel might be one. The more volume you do, the more that goes up. Could be your CRM, whatever it is. So those are your variable expenses. When you take your revenue and you subtract your variable expenses, you get this really valuable metric that most companies don't use is your contribution margin. And that's the money that's left over to pay for your fixed expenses or your operating expenses. So
why don't they use it? What do you mean by
I mean,
that?
it's just kind of like it's a
overlooked
finance.
often?
It's a finance term. Like
Term,
you don't really
yeah.
think about it much, but it's useful, and I'll tell why it's useful later. But then you have your typical operating expenses. So it might be your salary, your office expense, your legal fees, rent, utility, travel, meals, all that kind of stuff. And then you get your total expenses and then your operating profit, what we really care about. Okay, so the biggest thing you need to know is what are your benchmarks for your business? So whatever business you're in, and even if you're an entrepreneur inside of a business or you're actually operating a business, you need to know what those benchmarks are. So you'll see in there's some little blue italicized percentages.
Can you zoom
Gross.
in a little, Jordan, as well?
Yeah, hit the
If
command
possible.
plus. Yeah, there we go.
Yeah.
So what we're looking at there is like gross profit margin, your contribution margin. You might want to know your operating expenses as a percentage of your total revenue and your operating profit. And when we started our business, I didn't know what those were supposed to be for an e-commerce company, but there's a lot of places you can look. Like the first place is network with other business owners. Just talk to friends and ask them, like, what is this percentage for you? For an e-commerce business, it's really good to know as a percentage of revenue, how much are you spending on advertising? So like that one's got its own little percentage line item because that's a key metric. Another one, talk with a banker or a business broker and just say like, hey, I intend to sell my business one day. What are the metrics I need to hit? And I would, if you think you're gonna sell in the next 3 years, have a phone call with a banker. They're more than happy to take your call. You might be a little early, way early, but you could give them your story, and they'll be like, okay, these are the metrics you need to hit, and they know them if they're a banker in your industry. So that's a really good source.
That's very good alpha. By the way.
We're also listed as buyers in a lot of business brokers. So we get other e-commerce businesses sent our way that are selling. And of course, we'll sign the NDA. And the first thing we do is pull up the financials and be like, oh, that's interesting. Oh, that's where they're at. Oh, that's where we're at. Oh, shit. We could improve this line item. Like, we're way overpaying for this, or we're really good at this line item. So that's another good intel for data. You're not violating the NDA. You're not sharing it with anyone. You're just using it for your own business and whatnot. And then the last place, it's not as helpful, but you can look up public companies and just see where their ratios are. Public companies' P&Ls are fucking cooked to no end with all kinds of adjustments and whatnot. But that's where you can find your benchmarks. So every month and every quarter, we go through this and we decide our priorities based on this. So the first places are your areas of growth. These are the easy ones, the things you're probably spending 80% of your time doing, which is like, can we grow at the same rate? So can we spend more money in advertising and grow at the same efficiency or the same ROI? And if you do that, if revenue goes up, that contribution dollar amount goes up, and that's called operational leverage. So your overhead stays flat, but you're able to deliver more revenue that passes down to the contribution margin. And if your operating expenses stay the same, then your net profit goes up. The other idea is like you just get more efficient at your growth engine or your ROI. So maybe you spend less on advertising, but revenue stays the same. I tend to think these are really high impact because they have impact on the top line, but they require some like really skilled execution. So probability of executing, I don't know, middle of the road, or else you would have already done these things if they were pretty high probability execution things. And then the rest of the P&L is about decreasing expenses, and those are high impact and probably high probability of execution. So I really like those ones. Like I like decreasing cost of goods sold any chance I get, because once I negotiate that agreement, the probability of that actually showing up in the P&L in following months is high probability, right? It's just simple math. Other variable expenses like say payment processing or product software, those are good impact. Again, high probability of success. And then operating expenses. Those are tough. If you look at your operating expenses, some of those are growth focused and some of those are like longevity, risk management. If you ever have an HR manager, you're like, well, they're not really growth oriented, but like I kind of need one at some point.
Need my meals.
Yeah, exactly. So, and this is where that contribution margin percentage comes in. So if you're considering new overhead, how do you evaluate it? How do you decide, should I bring on this new overhead? And one way is to take the proposed amount of overhead that you're going to be adding on to your P&L and divide it by your contribution percentage. So if you're going to add $1 of operating expense, divide by, in this mock-up P&L, the contribution margin is 42%. Divide by 42%, that equals 2.4. So that dollar of overhead better deliver $2.4
of value,
of net revenue.
Yeah.
And if it doesn't, it's not worth it.
So let me ask you this. So
I haven't thought about that in a long time. That's good.
I like the way you approach it. So you have like probability and magnitude.
Yeah.
What I want to ask you is, what are the highest leverage levers in that mix that you just explained?
Yeah, I mean, one thing that we've experienced is like revenue has grown, right? And our efficiency at that growth, or the ROI off that ad spend, has stayed roughly the same. So imagine that operating expenses have stayed flat. The variable expenses go up with it, but that contribution margin staying right at 42%, but now it's working off of a much bigger number. So we've just seen profit margin go up because revenue has just increased. So that's the one you want to have, because
the answer is always make more money.
It feels good. It feels good, and it actually drops quite a bit to the bottom line. I think that's always the best lever. But there are other things in the business. I have a business partner or multiple business partners, and like they're more the growth business partners, and I'm playing a CFO kind of role in this business. Played the opposite in other businesses, but this role. So like I like looking at those ones where I can cut some variable expenses or fixed expenses because they're high probability execution.
Yeah, that you can cut them.
Yeah, and it gives them leeway. So when we add $1 of overhead, we like to see, can this person or this overhead generate $4 in net revenue.
I feel like sushi can generate.
Oh yeah, yeah.
Absolutely.
Sushi meals definitely high ROI.
What's your sushi quota?
It's
Come on, give us one
well.
number.
So every quarter we go through
How
all the
much
expenses
mercury?
and like we're like, ooh, that little $89 software a month charge, fuck that. And then like
Yeah.
the travel and meals and entertainment line item is.
I
you know,
never heard of
pretty
that, by
hefty.
the way. That's really cool. That you divide
the expense,
the
right?
expense divided by contribution margin
Yeah, I hadn't-
should be your threshold for
Yeah, and
for like what like do you hire that?
And it's
Yeah.
hard, right? Because
You
like,
add that.
if we hire this person, are they going to generate 4 times their salary? And
Well,
you don't know, but at least it gives you a framework.
Well, you said the word specifically. Will they generate $2.20 of revenue?
Right.
Did you mean revenue or did you mean value? Because
No revenue.
Because revenue is easier to identify. Value is harder.
Yeah, I mean, there's 2 buckets you put it in. There's actual growth, and then there's like the longevity and
Yeah.
risk management portion of your business too.
So you can do this with not just operating expenses, but your fixed monthly recurring expenses like people, payroll.
yeah, I mean,
Yeah.
when we
That's
hire
someone, that's really what you want.
and you know,
utilize it toward.
I'm sure
it's
some
less
of my,
useful for the operating expenses, right?
I think it is useful for payroll. I mean, that's when it's
Yeah.
most useful for is
Can you apply this to your personal life? Like if you want to add like a new gym membership or something, but you have like some.
Yeah, that's a
some
good question. I mean,
metric,
like in our life, we have variable expenses and we have fixed expenses, and you have
Yep.
your revenue, your income. The good thing about typically your variable expenses, they typically don't go up and down. Well, they don't go up as your income goes up. But yeah, you could like if I
Would you hold yourself to the same rigor? Like
Maybe.
in your personal life.
maybe yeah. I mean, I think there's like the utility factor that
Yeah.
comes into play, other than like how much money am I gonna profit every single month. But yeah, if your rent's going to go up $500, you should be able to calculate your personal contribution margin, which is your income minus your variable expenses, and be like, shit, in order to cover this $500 extra in rent, I need to generate X amount of dollars because my variable expenses are, you know, whatever percent of
That's pretty
my
epic.
income.
That's hard
So-
to do.
Well, we need to discuss this. How do you guys? What does your personal P&L look like? Where do you do it? How do you do it?
Rich.
Wait, what?
Are you a spreadsheet guy, or you're a spreadsheet guy?
Obviously,
Next.
yeah.
Wait,
No,
you-
seriously, like how do you do it? Yours? Do you use a software? Like
Wait, what?
what?
You need to repeat the question for Stephen.
Okay.
You like keep track of the money
Okay.
you spend?
How? Yeah. yeah, brother. That's the question, Tiger. Yeah.
All right.
Heavy hitting question there, Stephen.
Yeah.
Are you drunk? I like this. Okay, so
So actually, this hit home, right? Because the way I do this
spend
is I
my
yeah.
money.
Mario's here.
So once a year I do taxes,
Uh-huh.
and then I look at all the stuff, and I go, "Oh my God, what have I done?"
Okay.
And then I
This is the
and then I
Steven
make some
system?
changes. I was actually doing that today because
Okay.
you know I have to pay taxes in like 3
Oh, is that
days.
why you're quote unquote poor now?
You've been
No.
looking at
Okay.
your-
No, that's another reason.
One of the many reasons.
So many reasons. Yeah, I just I wait until I see a thing on my credit card statement, and I go,
Okay.
"Oh my God, what is that?"
Uh-huh.
Yeah, like I just realized I was
So you
paying.
look at your statement. I don't look at my statement.
Yeah,
The paper one?
It's a bit of a shock, to be honest.
Yeah. You look at the paper statement or online? What's your process?
I look at it in the app.
Okay.
Like
all
sometimes I'm like, "There's no fucking way I spent all that money," and then I open it up and I go, "Uh huh,
right. Yeah.
Uh-huh.
Dispute.
Yeah.
uh huh."
I remember.
Uh-huh.
I remember.
Oh, shouldn't have done that.
So then, what is your reaction to those things that are like, okay, I think I went a little overboard, or that's outside of my budget, or what do you react with? Since it's what
I usually whip myself, like the guy from was that?
good self-talk?
Yeah,
Yeah. Usually, and then
yeah.
7 Hail
Call-
Marys will get you straight.
Yeah.
I'm a big
Straight penance.
self-flagellator for sure.
But I feel like you're very organized about some things. Like you have like systems, right? So
Okay, I'm very
do you
organized about
use-
1 out of 80 things that I do.
Yeah. So this is not one of them then.
No,
Right now.
no,
Okay.
it's bad.
Do you use any software
No.
Okay. No Truebill or
No.
Mint or anything
No.
like that. Okay.
No.
What about you, Nick?
I used to use Mint, but it didn't
Yeah, I gave up Mint.
create like a P&L like I wanted.
Personal
and
capital.
it also didn't work with all the real estate limited partnerships. So anyway, what I do is like every quarter, every 6 months, I just look at all the expenses. And
Sorry. I keep looking at the
You
chat.
gotta keep eyes. Chat will get you.
Fucking chat.
The pickleball expenses are getting out of hand, Steven.
yep.
I lulled at the patio furniture one.
Tunsky, he bought lawn furniture.
I actually did buy a bunch of furniture, and that hit home because I looked at the credit card statement. I was like, "What the? Oh, that's right. I bought furniture."
Spent all my money on Azure. And the accent's even there. Je m'affage.
I like looking at it like over quarters because like your monthly expenses they're seasonal.
Yeah.
Right, like you have certain times of the year where like there's more expenses due, and like travel might happen 2 or 3 times a year, and like
Yeah.
I like to average those out across the months. So like I don't know, I just look at last 6 months, look it out, divide by 6, and be like, okay, that's what I'm spending per month. It's also tough because like I have the holding company entity, and like
Yeah.
some expenses go in there, but yeah, in general, just try to
I have
average it
two
out.
different apps that I really like. So you introduced me many years ago to Personal Capital.
Yep.
Personal Capital became Empower. It's still the same app. They just got acquired. Great app for measuring net worth, for tracking all of your different accounts, seeing all your investments. You can manually enter various holdings, like I own this shitcoin or this NFT, and assign a value to it. Man, at one point I had NFTs in there worth $100,000. I had to go in there and reassign them down to like
Every penny.
$500. They're worth nothing.
Yeah,
They're
can't sell.
literally worth nothing. So that's great. And then for budget, I don't like it for budgeting though. So I use a different app for like transactional data and budgeting called Rocket Money. Rocket Money, Truebill was acquired by Rocket Money. So they became, Rocket was its own thing, but they acquired Truebill. So Rocket Money is a great app. It's mobile and desktop, and I think it's awesome. And Jordan just threw the links in the chat if anyone's interested. But what I like Rocket Money for is like being able to set budgets by category. I never meet them. I always go over them, of course. But it's really nice to just be able to see and categorize things in a better way than you. It's like a better version of Mint. It's like I took 2 different apps to kind of recreate what I wanted Mint to really
I keep like
do.
a
and
personal balance sheet that I update every week. Just like
Do you guys buy your life income and expenses, sort of like your checking account versus like your investment account? Because I do this, and I think it's like, I don't think it's optimized, but I find myself doing this where it's like investment income, I tend to keep in the investment account. I don't like bring it to myself. And I look at it as like, oh, I sold a bunch of options. Now I have this like puddle of money to play with. And now I can like YOLO on some Coinbase leaps. Or,
yeah, you're gonna roll it into something that's in the investment category.
So I find myself, I guess, like bifurcating it. You know, I have like
bifurcating literally in your spreadsheet, or
like
what do you mean by that?
like I have 2 different ones. One is
Okay.
for like personal
Yes,
life, and then I have
definitely.
like the investment one where like I'm also managing like a P&L of investments, which is like
Yeah.
not really.
I would
like-
imagine your personal P&L is like income you generate, expenses you have, and just making sure you're within certain limits of where you want to be.
and that's pretty straightforward.
Whereas your investment is like your portfolio. There's the cash component. There's what you're currently invested in.
And there's like
what
an
you're
income component
trading,
to that.
There's an income component, but it all stays in that bucket.
Yeah.
Yeah. You don't let it seep from one bucket to the other, because if you do,
Yeah, but I don't think that that's like an optimized way to look at it. Like you should probably look at your
More holistically?
holistic finance
I don't think so.
situation as like, like you would identify, here's what I want
Well,
to risk and here's what I
that's
don't.
what
And it's like,
Empower
here's-
Personal Capital does for me is allows me to get a holistic view, but mentally I keep them separate because I don't
Yeah.
want that.
Yeah, you don't want to
crossover.
like dip into your
Right.
investment stash to pay your travel bills, ideally.
Right, exactly.
But yeah, like I exclude from the balance sheet, I exclude all the, inside of the portfolio income. It just stays in there,
Yeah.
except the real estate that I
That
use-
you take into the
that I take.
mailbox.
Yeah, in the mailbox. Exactly. All right, that's good.
That's
Let's
good.
let's move on. And if you guys have other like personal finance topics,
Oh,
like
I would
we
love
love talking about that stuff.
Some personal finance alpha from
Yeah, it'd be
people.
good to dish it out, and maybe we could chat about it on a future pod. Before we go into the next topic, do us a favor. If you're here with us right now, hit the like button. If you're watching on YouTube, hit the like button.
I'll do it.
Do us a favor.
I'll like the video.
All right, Steven.
haven't
Can
liked it
you introduce the melt-up thesis to us? Wasn't there a guy on Twitter who was just like the melt-up guy who was just constantly calling for like 2x on the S&P, and he got like memed out of oblivion?
I think you're talking about Dave H. Contrarian.
Yes.
Okay, yeah. He's got a very memeable face, too. I mean, Dave has been calling for melt-ups for a while, I think. To his credit, he was the only guy who was bullish in the entirety of Twitter, I think, like last October. So maybe kind of a...
Is he like the opposite of
Broken
Nouriel
clock thing.
Rabini, who's the perma bear?
Yes. Yes,
Okay.
he's the anti-Nouriel. I hope Nouriel doesn't invest his money. He probably has no money left anymore. Or it's like buried in his backyard or something. I don't know.
All right, hit us with it.
Are you
dude.
going to tell me what the melt and the up of melt up is? Because then we'll just fly. No, seriously, I'm sure a lot of people don't know what a melt up is.
No. So, I mean, my main goal with this segment was to say something so stupid that would be... I feel like everybody on crypto Twitter has this thing where it's like a clip or a tweet that everybody gets a dunk on them on.
Mm-hmm.
You know, like 2 years from now or
This
something.
is yours,
And yeah, like I feel like I haven't made that really...
dude. You're right.
Yeah, you
Moment.
haven't
one of
walked
these.
out on the plank. You gotta go out there.
So I figured now is the time for me to just absolutely just walk out onto the ledge and just
This
jump.
is make or break.
Yeah. Well,
Friend
probabilistically speaking, this is definitely going to be a terrible idea.
But
But-
the bigger the risk you take, the more followers you get. So please take a big risk here.
Yeah. Okay. So I think there is like a lot of merit to this idea actually, and I am once again somewhat balls long. So I guess I'm
That's
sort
a
of
CFA term, I think.
yeah.
Yeah, I'm also kind of like confused by the somewhat balls long.
Yeah. Well, those who follow me on Twitter know that I went no longer balls long back in April, I think. And I said I was going to walk away for the summer. I was like, the market's ETH's gonna top in May, and I'm gonna walk away from the summer. I was right about the topping, but I was wrong about me walking away because I'm a moron. So I've been just watching this godforsaken market chop for 3 months. But in that time, I have been reaccumulating because I can't shake this idea that what we saw in 2021 was maybe not like the blow off top of the bubble. I feel like everybody's like, that was the blow off top. And now we're sitting around in some retracement, or we're waiting for a recession or a blow up or whatever. And then we're all going to swoop in with our bags of cash and buy the bottom and then ride off into the sunset in 1 or 2 or 3 years or however long it takes. But there's very few people, I think, who are sitting out there saying like, no, actually, if you zoom out far enough, what happened in 2021 with asset prices and then the 2022 that followed, that was just a expansion move up and a retracement. We have another leg up.
Super cycle.
I don't think this is a super cycle thing. I actually do think we are going to die very badly at some point. But I just find it hard to believe it's going to be at the point where everybody just thinks we're going to die. That's like just not how markets work. This is I actually found I found something I tweeted last September actually, where I was just like taunting everybody, like, yeah, we're gonna make new lows, recession's coming. That's how markets work, right? It just does everything everybody says.
Like literally, it's consensus that everyone agrees that this is going to happen.
Now
Yeah.
that tweet was wrong because we did in fact make new lows like 3 weeks later.
But then January,
But
January
it was
hit.
basically the bottom.
Yeah.
It was basically the bottom, and then we just ripped.
Yeah.
You know, so it's a weird thing that happens. And now I find myself in a similar environment. Like all of the I don't know if you guys listen to macro podcasts, but all the macro podcasts are once again telling you about how the world's ending, we're all gonna die.
Yes,
inflation's gonna go back.
JP Morgan analyst just came out yesterday saying like, "Oh, here comes the fucking guillotine." You know, like in the next 6 months, here it comes. Like,
Yeah.
everyone's on that.
So this concept of a melt up is like interesting. Like broadly speaking, it talks about the idea about how just asset prices. There's some nuance, but some people when they say melt up, they mean blow off top, and some people mean different things. But we're going to kind of use them interchangeably, right? It's just this idea that everything is just going to go up, slowly, quickly, whatever. Often in a time where people are saying like this shouldn't be happening, you're all going to lose your money, markets shouldn't be going up right now. We've seen this in the past. I mean, most recently we saw this kind of in like 2018, 2019. We saw this during the .com bubble famously. Like I think was it Bernanke who went out there and was like, "This is a bubble," and then everything went up, like basically doubled, like in a matter of like 6 months or something stupid. So I kind of feel like the stage might be set for this again, and I feel like most people are not really positioned for this outcome. I think you have a few forces at play right now. You have sort of this kind of confluence of a few things. One, we have the end of the Fed hiking cycle. Like I think the Fed is done. And
Done-ish. Yeah.
markets think they're done too. I mean, what's the probability of a rate hike next month? Like 5% right
We
now?
could look that up. I think it increased probably today, but
Maybe a little bit today, but it's basically zero, right? So you have the sort of petering off of rates, not necessarily cuts, but the rate hikes are sort of stopping.
and even if one more happens, I think you're still probably okay.
Because
Like,
a lot of this stuff
you're
with
still
markets, as you know, is like a rate of change
Yes.
thing versus like sort of what's anticipated. You have growth up. Like the economy is really weird right now where like it feels like if you talk to everybody talks about how bad the economy is. Like it's like something they're programmed to say, but like anybody who's gone out in the economy
it doesn't look bad at all.
is aware that it's not bad. Like if you go to an airport, it's full. Hotels cost
Vegas.
$1 billion.
Yeah.
Nobody can hire people for work. It's obviously it's humming. So it's like a really weird phenomenon. And then meanwhile, you have inflation kind of falling off a cliff at the moment, although there has been some recent surges in energy prices, right? So you have this confluence of rates stopping, you have growth up and inflation down. And for people unfamiliar, like the sort of growth up, inflation down is that's the Goldilocks, right?
Yep.
When you have growth up and inflation down, that is the Goldilocks of the investment quadrants, and that's when risk assets just
It's the best quadrant you want to be in for risk
It's-
assets.
kind of like a moon status. So that's sort of like my fundamental backdrop. But as you guys know, I don't really like fundamentals that much because I
Right.
like to draw lines.
Oh, we don't believe in fundamentals.
What are the
Steven.
lines,
You never
Steven?
Baby?
responded to my text. by
We
the way.
don't. Your text was stupid.
No, what? What? I knew that.
he
was-
didn't respond
Did
to you at all.
Did you see that I said Steven's response is "This is stupid"?
Yeah.
And you just pulled that.
I don't have time to explain to you the nuance of this,
I knew,
Armand.
you son of a.
I was actually going to back
Oh
Steven up
my
on that
God.
text, but
Like,
Are you out now? Or
no,
are you...
I was going to back Steven up
It
on
was
it.
a complete like non sequitur from everything I
was gonna
We'll,
back up- I
we'll
was
talk
gonna back
about this
Steven
later.
up.
In the meantime, can we put up the chart?
Man
Great
doesn't believe in fundamentals.
producer of the podcast. There we go.
Yeah.
Okay.
What
Yep. All right.
What are we looking
So
at here?
what we're
Another
looking at
backup.
here, this is a lot of stuff. So
Looks like S&P.
So bear with me here. This is a chart of the S&P. Now, I like to do something in my
This looks
day
pretty
swing
bullish to
trading.
me.
Yeah. So, Eric, are you familiar with the concept of range projections by any chance?
I would assume that's what you've done with the lines there, the horizontal lines.
Yeah. So there's this thing when you're day trading where you can sort of measure the length of like say like a manipulation leg down, and then when you catch an expansion leg on the way back up, the markets do these weird things sometimes where the leg up tends to be like a really nice perfect multiple of the manipulation leg down.
So on the leg down, I've noticed you like to use the Fibonacci retracements. On the expansions, you like to do something else. Is that accurate?
Yeah, that's a different thing, and I don't want to muddy it too much. But the basic like very dumbed down version of how I trade is I wait for the market to do something that puts a bunch of people off sides, and then reverse in the opposite direction, and then I like to hop on that opposite direction, knowing that a bunch of people have just gone the wrong way and they're going to become forced buyers or sellers
And
in the
you-
opposite
yeah,
direction,
yeah.
and I want to ride that.
And
so
you
I
want to
wait.
be a little early, kind of like a surfer. You want to be before the wave.
Yeah, I don't want to like predict what's going to happen beforehand. I want to observe the wave coming in and then just taking a bunch of people out and then like hopping on the wave as those people are like, oh fuck, oh fuck, oh fuck. So in recent history, if you pull up like an S&P or a NASDAQ chart or basically any risk asset, you'll notice like two really interesting periods on a chart. The first is that sort of like late 2018 period, which a lot of people will remember who are sort of paying attention to markets. This was an era where the Fed was sort of saying like, we're going to pull back all of this excess from the 2008 QE era. And the markets were like, nope, 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 nope. And we had this sort of like taper tantrum thing going on. And we had like a really severe sell-off. Trump got on the mic and he was like, I'm not going to do the impression, but he was like to turn the ship around, pull it back. And the Fed actually capitulated, and Powell basically just took his foot off the brake and put it on the gas. And then we just went nuclear after that, interrupted by COVID, which was like another significant sort of downturn in the market. So both of these events, you saw this leg down, which sort of liquidated a bunch of people, got a bunch of people scared, got a bunch of people thinking the market was going to tank. And then we zoomed back up. What's really interesting if you pull up this chart is like if you sort of fib out these levels and you do like a range projection of both of those levels, you arrive to a market top like basically at the exact level that we topped at in 2021 there.
Yeah, it looks like it almost hit your magic line there perfectly.
Yeah, and if you were trading this on like the 5-minute chart, what you would be doing is you'd be waiting for like a retrace to like the 50% level and looking for some sort of, we call them PD arrays to go long in, and then like hopping back on the uptrend. And completely randomly, I'm sure, like if you actually look at this chart, you will see that the big sell-off that we had last year was like a almost to the dollar 50% retrace, of both the sort of 2018 and the 2020 manipulations. And that's really interesting to me because it tells me that there's something about these two like points of time in the market. And it kind of makes sense if you think about it. Like 2018 was the time where we decided like, you know what, we're not gonna undo this stuff. We don't want to upset the market. We're just gonna let things fly. And then 2020 was us doing the same thing, but on steroids. So my generalized thesis is that like the leg up from 2021 is a result of that, but it's not the end. Like what we saw in 2022 is actually just a pullback of that, and we're ultimately going for like a much higher target that like we haven't reached yet.
Okay, so to support your thesis, what I have noticed too is like the bill has to come due at some point, but like anybody who's like in power at the time their incentive is to kick the can down the road. And like no one ever wants to like take the bill, right? So the bill means like, oh shit, we've like had this like monetary expansion, etc., and now we got to fucking put the brakes on. Nobody ever is willing to do that. And I kind of agree with you because I think that like here's another example of where like I thought, oh fuck, here comes the bill, and no, it doesn't come because nobody wants to fucking take it.
Yes, and I agree with you with that fundamental backdrop. Before we talk about that a little bit, and I promise you I will stop talking in a second, but there's just so much cool stuff in this chart, so I just want to finish it out. So you see on this chart, if you're looking at it on the screen, I have two magnets up there, which I like to use as sort of like when you trade, you're like, where is price drawing to? Call these draws on liquidity, right? You want to have an idea of where price is going to go. Otherwise, why are you in the trade? And we talked about this idea of doing range projections from specific points of manipulation in the market. We talked about 2018. We talked about 2020 COVID crash. We had another one recently, which was last year. We had a move last fall where we had this breakdown to new lows, and everybody was like, oh, fuck, this is it. It's over. And then what happened? We reversed from those lows, and then we basically went up only. So if you do a range projection on the 2018, the 2020, and the manipulation leg from last year, if you go up there to about 5,800 on the S&P,
Whoa.
they all converge on the exact same level. And furthermore, if you take the 2021 leg from COVID, which I've superimposed on the chart, and put it from the bottom of last year, that leg goes also exactly up to 5,800 by about June or July next year, I think, if you look at the chart. And this is like something that's, I think, very inconceivable to people if you say this, like, oh yeah, S&P is going to 5,800.
It's like a 30% rip higher from here.
It's a big rip. But if you look at it in the context of this chart, like if you zoom way out, you can actually see how the move from last year is a pullback, maybe. And, you know, this leg, which people are calling a complacency shoulder, which I don't agree with personally, looking at the chart for a variety of reasons. It doesn't look like a complacency shoulder to me. It looks like a move that wants to take the all-time highs. And I think once you take the all-time highs, like people go, oh shit, baby, it's on. And then all bets are off from there.
And then the bill comes due. No, it doesn't. It's just
Well, okay, so can you give me and Calcium a percentage of confidence, because like everything's probabilities. So like, I don't know, where do you fall on like this thesis? And Jordan, you can throw the camera back on Steven's pretty face. Okay, cool.
I am like 50-50 on it, honestly.
I'm going to need you to go higher. No.
50-50 is a cop-out.
50-50 is not a cop-out, because like if you want to buy options for 5,800 on the S&P for like next June, you can get a very,
literally free.
very nice return.
That's $5.
So I think an interesting portfolio is to go like heavy cash, but then heavy like really long convexity, like super out there.
The barbell approach that we've been talking about. For
Yeah,
2
it's
years.
like barbell, but like you are especially weighting towards like you might be 50% cash, 50% long, but the 50% long might be like
all convexity.
30.
based.
Well, you might be like 30% long spot, but then like 20% kind of like convexity.
Could
Like you
I-
might be buying a lot of like out of the money options scattered through end of this year, June next year, and then like end of 2024.
Could you, in your hypothetical portfolio, could you substitute some of those like call options if people aren't, used to those with crypto, like just a higher beta risk asset?
So I personally have a lot of crypto, but in doing so, it's a well-known thing that says like when you have like a thesis on something, you should bet on the thesis, not on something that is a proxy for the thesis. And I am definitely betting on something that is a proxy for the thesis, because I'm pretty confident that I'm like very confident that S&P goes to 5,000. I think probably
But-
by end of the year. Like I
and-
feel very good about that. 58 is a big target.
And by proxy, you mean crypto versus
Yeah, you're like, oh,
S&P.
stocks will go up. So if I bet on crypto will go up more. And that's probably true.
I mean,
but you're making a
have
proxy bet.
I have high conviction in that narrative.
Yeah, I mean, you make a good point, because like crypto specifically is just like such shit liquidity. Like, I mean, the market isn't trading like there's
Oh.
money coming in.
But
I
that
mean,
cuts both ways, baby.
I mean, Christopher Hildebrand just mentioned thoughts on the Sol
Great
and
name.
Visa partnership news, and it's such a perfect example of this, that Sol has this Visa partnership, and in a normal market where money is coming into into crypto, that thing pumps and continues to pump. And in
yeah.
this case, it went up 4% and retraced the whole fucking
Dude,
thing
I
in a day.
saw, with that spot ETF submission on ETH, and like ETH didn't even move.
Nope.
Right.
I mean, it moved a lot, but it fully retraced. But it was like similar to last week. There's this weird phenomenon going on right now where if you look at like TradFi proxies for crypto, like MicroStrategy, like Coinbase, like Bitcoin mining stocks, and you compare those to the price of Bitcoin, you're seeing like a complete divergence in the performance of those things. Like, for example, we had the Grayscale kind of fake news last week. Bitcoin pumped, and then it went to new lows, basically. It like went to... But MicroStrategy pumped and then only retraced part of the pump. And if you look at MicroStrategy stock and Coinbase stock versus Bitcoin, like Bitcoin's been making lower lows, but MicroStrategy and Bitcoin and all the miners have been
stocks too, yeah.
making higher highs. And it makes me wonder if a lot of these smart like TradFi money, institutional money, is just like we're not fucking around with these like illiquid
playing the
spot
proxies.
markets. We're gonna play in the proxies for now.
Yeah.
We're gonna buy MicroStrategy. It's basically a Bitcoin ETF. We're gonna buy Coinbase. We're gonna buy these miners. This is like a technique you use in day trading. Like you look at two assets that should be correlated, say like the Nasdaq and the S&P. And if you're expecting a reversal, if you're expecting an asset to kind of bottom and then go up in a particular zone, and you look at one and it makes a lower low, and you look at the other and it makes a higher low, that's like a long signal. That's a signal that there's some institutional money coming in and accumulating down there, preventing the lower low. And that's like something you can actually use as a long trigger. So I'm like wondering if that is something we're seeing in crypto right now. We're seeing the early footprints of the bull, but like in the traditional stock world, and we're all just focused on crypto, like in the spot market, which is just dead and horrible. But like, why would it be anything but? Like, we blew the whole thing up. Binance is like, looks like they might explode at any second. It's like the whole market is trading on Coinbase, like legitimately, quote unquote, right now. It's a mess.
Yeah,
so,
I think
so it makes sense.
I think it's taken me a while to sort of buy into like bull market thesis. But I saw like a tweet from Jim Bianco, who like just like draws out all the lines on the NASDAQ from like the last 25 years plus. And I think we're tracking for the best year ever right now. It's hard to ignore that kind of thing. Yeah, like we're just doing so well.
Look at the candle from just pull up a monthly chart of the NASDAQ and look at the candle from June. And then, like, tell me you want to fade that. Like, tell me you're going to fade that. Tell me that's not going to new all-time high. Like, I feel like people are so in the bear rut that, like, the chart is just staring them in the face. Like, this is going higher, and people don't want to believe it.
Are you describing a scenario where, like, stocks could hit all-time highs, but crypto could just stay in a rut? Because, like, when I was planning out my scenarios of potentially selling my stocks and buying crypto, this was, like, the best-case scenario. So is that what you're describing, or do you think crypto will kind of come along for the ride, but maybe not at the?
I feel like
not
crypto is so dependent on the ETF, unfortunately. And I feel like if you want to bet on this and you don't have any money allocated right now, I feel like you should just put all your money in the NASDAQ and not so much in crypto, because there is a chance that stocks do the melt up and then like ETH and Bitcoin underperform like they have in the second half of this
assign
year.
a higher probability then to stocks and NASDAQ? Like, if you're really going to make the melt-up trade.
I would. And like the truth
It's more of a
about
for sure
yeah.
thing.
Holy
shit. First ever full-blown
This is
studio
what happens when
accident.
you
There
do
broken
live.
glass
Sorry for
everywhere?
your ears.
Sorry for your ears. Just keep rolling. Just keep rolling.
I feel like you guys ever see Wayne's World? So they're like doing this thing in their studio, their like garage, and they're like going straight to.
Still going for the drink, by the way.
Such a professional.
Okay.
Make sure there's no glass in that, by the way.
All right. So what I wanted to say before Eric blew up the studio is that this is something professional investors know. Like, a lot of people like to invest in crypto because, you know, you can get big gains, right? But in reality, you can lever up anything in TradFi, right? Like,
Sure.
if you think the NASDAQ is going to go up, but ETH's going to go up twice as much, like, you can buy futures. You can, like, lever up 2x on the NASDAQ. Like, it's not going to go down 50% and liquidate you, you know? And you can take on more returns. You're going to take on more risk, but you can sort of simulate that Wild West high volatility return profile of crypto if you want to, by, like, kind of levering tech stocks or by buying, like, a specific basket of, like, ultra high beta tech stocks or something like that, right? So people don't necessarily have to buy spot crypto. Like, obviously this
Sure.
requires a little more sophistication, but like,
Yeah.
that's like something I've been thinking about personally a lot more. It's just like, why do I own so much crypto? Like, if I have this much of a risk tolerance, maybe I
Well,
should just buy more.
Can I talk
Tech
about
stocks.
this a little bit? Because I find myself to be better at what to buy rather than when to buy, and I basically lean on you for like when to buy. and I really like your takes on this. Like this melt up thesis is like not something that I consider because I'm like, I find myself being sort of like on the consensus side where I'm like, oh shit, economy looks like it's gonna fucking kill us. But I'm hearing what you're saying, and I kind of like it where I'm like, oh, let's be contrarian here. Let's be non-consensus. I like that. And then I'm thinking of like, well, what do we want to own, right? Like, what do we
Right.
want to own if this thing goes? And I think NASDAQ does make sense, but NASDAQ's kind of boring for me. Like I want to go a little harder. And I think that crypto is just basically a higher beta NASDAQ. We're seeing some decoupling sort of like working against that thesis right now. But, within crypto, I'm thinking like, well, then I want to own ETH, right? I do love that. But what's going to be like higher beta ETH, So like there's some things that I like here. And I sort of look at it from a fundamental perspective, typically, where I look at like token terminal, I look at the fees, and I say like, what's a real business? Like what's like a real thing that generates value, and there are plenty of these protocols out there that are like generating a ton of income, right? So
What have you found?
Lido, Maker, Friendtech, Base Chain, Optimism to a lesser degree, Synthetics. But I think what I'm considering as well is like. When you're looking at that game, like you're exposed to the regulatory risk to 100%, right? Like Uniswap generates a ton of fees, but like the Uniswap token as an investment is not going to move unless they return value to the token holder, which they can at any time, but it is almost entirely dependent on whether or not they're like deemed a security.
A16Z wants to turn it on.
Yeah, and like. As a gov coin, those gov coins are like entirely owned by like a handful of people. So I think where I land on it is like, well, I know something that does accrue value from the earnings of the business, and that's Coinbase. Like coin stock is the one where I'm like, this is the one. That's the no-brainer for me. Like there are other things that I do like. I like Optimism. I like Lido. I even like Chainlink right now. I've spent the last like 48 hours just like reading about Chainlink.
Get out.
He says get out.
I love Chainlink, but like.
But wait, what about the tokenomics? I mean,
Exactly.
It's basically set up so that the validators and the founders and the VCs just dump on you all day long.
Okay, so with Chainlink, what I see here is like we have this paradigm that like maybe we didn't want to get into, where it's just like there's going to be a fuckload of chains and a fuckload of protocols, and like you're just going to need to pull data all over the place. And that to me seems like you're going to want to choose the one that is like the most legit.
Yeah.
And Chainlink.
I am
makes
looking
the most
forward to
sense.
the Bankless episode where they dive into like the CCIP. They're basically like integration into Swift.
Yeah.
And what that means. And
I
I,
mean,
hope they
like-
go in the tokenomics
Like
part of it.
in the Money Channel in the last like week or so, we've been talking about like pulling real world assets on chain and how that would affect things. I think Chainlink plays a key role there, but I'm also just thinking more like what about like interchain data that needs to be pulled? Like Chainlink makes a lot of sense to me. It doesn't make a lot of fees right now, according to Token Terminal. But I think if I'm looking at like fees and like value accrual, the answer to me is Coinbase, and
Yeah.
there's like no better answer.
And I like that Coinbase took a 10% stake in Circle, because like when you talk about, this Sol Visa partnership, anything involving like using traditional payment rails and crypto being a part of that now, typically these companies need a Circle account in order to like receive that money from the acquiring bank and from say Visa or PayPal, whoever it may be. And I think Circle is going to capture quite a bit of market share. And so it's nice that Coinbase could
has
be a part of that.
10% ownership
Yeah.
or something.
Yeah.
Yeah.
I mean,
Absolutely.
I'm just buying ETH and coin for the most part right now, and the reason is because like I actually have a fear that this next bull run is going to like I feel like what has a good chance of happening is everybody's sitting here in disbelief. Price climbs the wall of worry. It starts going up, and then people are like, okay. And then we start approaching all-time highs, and the halvening starts coming next year, and people are like, "Oh my God, stock market's at all-time highs. The halvening's right here. I gotta FOMO in," and then everybody like shovels in next spring. But then in reality, like the tightening cycle, like actually comes to
then the
fruition.
guillotine comes, yeah.
Like something happens, and then everything just absolutely nukes, like really, really badly. So I don't want to be stuck holding 17 different kinds of shit coins for like what I think might end up being like a 3 to 6 month trade.
But
you know?
fastest horse. I mean, like, so like Lido, for instance, Lido is like, to me, exactly Uniswap token. Like, great business model, but like token dog shit. They're literally worthless gov coin.
I don't care. I actually don't care about fastest horse. I care about the ability to get in and get out and to simplify my life. And like the return profile of ETH is already so freaking high. And it's also not a given to me that even something like Optimism is going to like outperform ETH. Like there's like a very high chance that you get like ETH futures ETF, or there's some backdoor ruling where they're just like, fuck it, spot ETFs for Bitcoin and ETH, and then they both just absolutely surge, and before alts can even catch up, like
I completely
the
agree
bear
with
like
you.
rugs us and
Like,
something.
let's
you know?
just call it this. Like the portfolio is ETH and Coinbase, like on this like crypto portfolio. That's the portfolio.
That's a core portfolio.
And then you have like, for me, I do want to have some faster horses because I can turn them into more ETH. Like I just ultimately want more ETH. So like if Lido's gonna outperform ETH, then
I agree, but I'm just like skeptical that it will, or like
yeah,
might not
I mean,
be worth it.
nobody
You
knows.
just don't even view it as a faster horse. You're not willing to make that bet, you're saying.
Not over 3 to 6 months. Like if I thought there wasn't this looming like nuclear global credit crisis in front of us,
So
then
it isn't a bull market in that sense, like that we would be experiencing.
I think if you
It's
go
a- it's
if
a
you go to
fake out.
like severe lows and then back to all time highs, I think that has to be considered a bull market.
Well, I think people might look back and be like, "Oh, wait a minute! Like prices went up for a year and a half, actually, and we didn't notice it, and that was actually
Yeah.
the bull market, and now it's oh fuck!" Like these things aren't
Yeah.
so simple.
I think it was more
You
like
can't just plan it out in advance, and yeah, we got 4 years.
a
and
better
this can
narrative is that
happen,
like
and-
Right.
the recession was just like front run so hard, probably. Like I think it is a bull market.
It will continue, I think, to be delayed. Like, dude, it's been we've actually been banging on this drum for a while. Like, no recession for a while, no recession for a while. I think we were all saying like no recession until at least Q4 this year, and now that we're here, it's like looking Q1, Q2, Q3. I don't know. Like, I could see us going all the way through the presidential election. That this economy just stays resilient, and it really just sucks
So-
people in.
I know you guys don't like to do 3-hour pods. I don't mind, by the way. I'm happy to do one. But maybe we can start to talk about that question from False and bring the money segment in. How do you think the election might affect things in general? And my question would be like, what did the last 2 election years look like for crypto? I don't remember off the top of my head.
I mean,
Well, we already had a case study in this last year, right? They just dumped the Strategic Petroleum Reserve. Inflation was bad politically, and they just dumped oil on the market. They had an midterm election, and they dumped the oil, and they brought inflation down, and they won
What do we
a
got?
bunch of seats when people thought they were
300 million barrels left. In
yeah,
the
so the idea
SPR.
that they're not going to pump it again next year in some way, like I don't buy into. Like I think that has to be a bullish catalyst.
Nobody
you-
wants to take the bill.
I think you'd be ignorant to say that the Fed is like a 0% political body. It is to some extent a political body. So I wouldn't be surprised if like, and it maybe is naturally going this way where like 2024, you don't see any rate hikes, and maybe you see, depending on what happens in the underlying economy, like maybe you see some, some form of QE, but like I wouldn't be surprised if like you see any kind of forced fiscal, like the government spending money in any way possible. I mean, Biden is trying to find any which way he can to forgive student loans. And it looks like in their most recent polls, Trump's people are staying flat, but Biden's people, specifically the younger demographic, they're saying they're not going to show up to vote. Last time, they were more than happy to come out and vote because they were like against Trump, will show up to vote for Biden. But like Biden in the polls is not looking so hot. He's retreated a bit. And you can kind of tell because I don't know if you guys noticed this, but he had like the Health and Human Services Department issue this thing that like we recommend that the DEA take marijuana down from like a Schedule 1 to like a Schedule 3. These are all like signs
That's
that like
capitulation.
we're trying to go after the younger market because they're showing in the polls they're not going to show up. So, as this gets closer, you're gonna see like some form of like, you can call it populism, you call it like fiscal stimulus, like any way essentially to buy some votes. And so
Yeah, that's a good point.
you
Just give 'em
might
cash.
also I mean I would love some stimmies again.
Take it while it's good.
Stimmy.
boys.
Yeah, but more volatility and like
Stimmies are good for that statement, huh?
yeah, I think so. So
All right.
I don't know.
Yeah, let's move it along. We've gone too far. We've gone too far.
Hey, you were enjoying yourself.
I like talking.
I love seeing you in your
love
little
yeah, I
element.
just
That's
love
great.
love talking
I love
about losing money and stuff. It's just like my. It's my
So what do we got for
Ikigai?
What do we got for meaning today?
So Tim Urban has this article called "The Tail End," and he references a previous article. And if you haven't read "Wait But Why," it's a blog,
Best blog on the internet. Come
but
on. Come on.
by Tim Urban. He writes these like
Best blog.
prolific, very long but timeless articles. Like you can kind of tell his criteria for an article is
I'm excited for the people that have never heard of it.
will it be
Like,
timeless? Like
your day is made.
yeah.
Go check it out.
And so he references a previous blog post where he talks about just literally plotting out the number of months, weeks, days you have in your life. And he's like, it's funny, you could put a whole human's life on a piece of paper, printer paper, and print
Just
it
a
out.
bunch of little dots.
Little dots of weeks that you have in your life, and you can cross that out. I'm pretty sure there's like 100 e-commerce products that have, you
Yes.
put in your birthday, and it'll have them pre-crossed out, and then every week you can cross out your week and see how many weeks you have left. And he starts talking about in this article about like, well, hey, how many Super Bowls do I have left? Well, I've lived this far. I've probably lived to 90. I have 60 Super Bowls left. I have 60 winners left. I have, I eat dumplings like 5 times a week, so I only have this many times I eat dumplings.
He said I only have 9 presidents left.
Oh yeah, he's seen like X number of presidents, so he's like, I will only see 9
That's
presidents
crazy.
Oh, it's crazy. Yeah.
left. And he starts talking about these things. Then he goes into the real meat of it, which is like he thinks about his relationships. And he's like, as a 30-something-year-old, I may only see my parents 10 days out of the year. I may only spend 15 days out of the year with my siblings. And he's like, when we were growing up together, I saw them every single day. But now at this stage in life, I only see them as much. And he comes up with a stat, basically like after high school, he spent something like 90% of the time he would with his parents already at the point of high school. And so he's basically saying like, even though you're a third through life, you may only have 10% left with your close family and friends. He even talks about his 4 buddies in high school and college. He used to hang out every few days and play hearts together. And now he only sees them 3 times a year. So he's like, I only have X number of times to see my buddies all together again. So, Steven, you brought this up because you made a trip back home recently. So, like, what was the impetus for this popping in your mind when you made a trip back home? I assume you saw some family.
Yeah, I went home for my my grandpa's birthday. His 93rd birthday. And yeah, I was hanging out with him and talking to him about life and everything. And then I just like doing the math in my head. And I was like, geez, like if I was to be like an actuary about this, like I put the over under at the number of times like I'll ever see my grandpa again at like 4. And that was really fucking crazy to me. And then it reminded me of this. And then I started thinking about it again. Like, 'cause this article was something I had read a while ago. And I remember reading it and like, especially like the looking at the graphic they have where it's got like do we have like the,
I'll pull it up. And put it
yeah,
in
the
chat.
chart with like the dots. Like it's really stark to look at the dots and see like the visual representation of all of the times you've seen your parents in your life and just like how many you have left, and I actually know a guy who had like a chart like this. And is how do you guys feel about this? Like putting like one of these in your office, and
They're
you're
very
like marking
popular.
off. You're marking off
I've
the weeks,
noticed-
and you're marking off all of these moments.
I've
Jordan,
noticed.
scroll down to the one. It's further down. Do the one that's like time with your parents, where they're like 90% is marked off. I think it's like towards the bottom.
Yeah, there he's talking about Super Bowls and winters and
So, Steven, I've noticed that people
pizzas.
either love or hate this. And there are some people that have no problem with getting one of these, printing them out, because they sell them. Like Wait But Why sells them if you want to support Wait But Why. And
that's the one.
yeah.
Oh damn!
And
That's
you
it.
can mark off the weeks of your life every week. And some people find that, for example, like Peter Attia talks about this, and he talks about how he finds it to be a very motivating, sobering in a positive way, but that a lot of people find it morbid and difficult to face. Where do you guys land with that? Like, it is a constant awareness of your mortality staring you right in your face, alongside the idea of just, if you were to just do the parent chart, that one just facing you constantly as well, realizing like, whoa, 90% of it is gone is kind of a big deal. So yeah, where do you land with that? Would you just had that experience and you brought this up, would you print one out? Would you buy one of these?
I
Look at
would.
it every day or every week?
Yeah, I would, and I personally would find it useful because I am very prone to getting lost in just like the minutia of my work, and
So would you consider it to be a useful anchor for perspective and grounding into the present?
yeah, like I said, I think a lot about how much time I spend like looking at a chart and like how
This is a better chart, by the way.
yeah, you
This
know.
is the only chart that matters. This is my kind of chart.
And it can just get easy to be lost in
It
that.
is.
And you think about what it's going to be like at the tail end of your life, looking back on that, and you do wonder, am I going to regret the time I spent doing these things? And yeah, I just feel like I'm just getting into that phase of my life where I'm like actually starting to think about this quantitatively and just like how few of these, all of these. I think about this like with my dog all the time, actually, too, because I'm just like, fuck, this stupid fucker is not gonna.
dogs
He's only gonna live like
really warp
10
your
more
sense
years.
of time, for sure.
yeah.
Yeah.
And I was just like, how many times am I really gonna take him to the beach here? And it's just like, because that he's gonna be like
It's a short life.
one of the first things, you know. It's like probably either him or my grandpa, you know, like just if I'm just like looking at it statistically, you know, they both mean a lot to me, and probably my grandpa will go first. But like after that, like it'll be little Ziggy, and that's like a guy who I spend like every hour of my day with, and they have like such a short life that you really with them, and obviously we should do this with humans too, but they're like there's something about dogs that like force you into that compression. Like you see their whole life go by so quickly. Like he's already basically like 30, you know, and
Yeah.
I just got him, which is crazy.
I just to add more to the foundation of the conversation, and there's so much to explore, but I find this to be such an interesting concept, such an interesting way to approach life. Tyler says memento mori in the chat. You know, it's like this is an ancient practice that was popularized by many of the great philosophers that we look back at today. The Greeks that had these skulls sitting on their desks, their tables, their homes, to remind them of the finiteness of life, the mortality that faces every single human being that no one will ever escape. And they viewed meditation on death and mortality as a very useful tool. I personally find myself as somebody who meditates on it frequently enough by nature that I don't necessarily require additional external mementos to remind me of this fact.
What does memento mori mean?
I don't know.
You
I think
have
it's like
remember you have to die.
Yeah,
like
something like
remember
It's like
your death.
understand your mortality.
Yeah.
yeah. Yeah.
Cool.
I don't know the exact translation, but essentially that. And I think that it can be a useful tool in particular. You know, another person who talks about this a lot is Sam Harris. Sam Harris is a person who really tries to emphasize for his audience the importance of the meditation on death and the usefulness of that for yourself, for your family, for everyone around you. And yeah, I don't quite have a particular clear perspective on it yet, because I think that when you go too far in the direction of over exploration and meditation on it, you can lose yourself in a bit of a state of anxiety, actually, like death anxiety, time anxiety. But that time anxiety, at the same time, on the other end of the spectrum, I think that most of society needs a kick in the ass and needs to remember that they are going to die and that everyone around them is as well. Because I find that the majority of people are actually asleep at the wheel of life, living in this sort of zombified trance state, as my friend Jason Silva says. And I love that video. Actually, I think that that's like, watch Jason Silva's video on nonconformity if you need that kick in the ass. It's one of my favorites. And I really believe that most people need that rather than the sort of like what I'm asking for, which is maybe a little bit less. And I think I'm already pretty grounded in the present. But I'm curious where you guys land in it, because I think it is a very useful tool.
Well, I was going to ask you, because you're the only one out of the four of us that's actually on both sides of this. You have both of your parents, but you also have a daughter. And so I'm curious, like, does it, I don't know, do you, when you see Tim Urban's chart and what he's talking about, that you have X% time left with your immediate family, do you think more about your parents, or do you think, does it translate to your daughter and like, wow, like these 18 years are the majority of it? Curious, do you think mostly about your parents or your daughter?
Yeah, pretty much both, pretty equally. But I will say that something changes. I mean, everything changes once you have a child. But what really changes is your perspective of time. Because now I have a different sort of arc of time moving relative to my own, one that I created. And that time is moving at a different rate of function than my own. And so what it provides is like this weird perspective where time is in many ways moving slowly, but also way more rapidly than ever before. And so these 7 months have flown by. And I mean, it really forces you to pay attention, to be in the moment as much as possible. If you're lucky, I mean, I'm very busy, but I really try to meditate on every moment. And you can't help it. I mean, once you have a child, it's like every little thing, every little movement actually is a great exercise in moving into the present. I mean, just even yesterday, I just remember like she was making new movements and new faces at me. And I was just like eating her up and kissing her fat, chunky thighs and like kissing her face and just like obsessed with every little toe. And, oh, you got this from your mom, but you got this from me. And like seeing how she's forming and was formed. And what that does is it draws you like deeply into the present. So at the same time, of course, parents getting older and watching that occur is very difficult for any person, for any child, for any human being. And so I don't know. I think about a lot. I'm like, I have this discussion with myself of like, should I have moved back to Sacramento? And I mean, I'm being honest here, like, and stayed near family and just experienced more of that, especially knowing that like they're getting older. And then of course you balance that with like, you have to create your own life and your own family and your own future. And it's a weird tug of war, if you will, like where you need both and you want both, and both are critically important.
And maybe your parents would want for you to create your own life and not necessarily, you know.
I can't imagine saying bye to my daughter one day and just having spent 18 years with her, and then all of a sudden I see her 15 days a year. That's fucking crazy. That's crazy. Like, I can't even imagine that. I can't imagine how my parents feel. But my parents, like, my dad is so cool about it. He's never like gives me a hard time. Why don't you visit more often? Why don't you call more? Nothing. And I do a lot. But like, I feel like I would be like, yo, I need to see you. Like, I want to see you more. Like, I'm going to come to you and visit you more. And like, I don't know. Maybe you change. Maybe you learn to let go. Maybe once they leave the nest. I don't know. I'd be more a question for the older parents out there. But it is weird. I don't have clear answers for it yet.
I feel like that's the number one thing I would do if I had more money, is I would just import my entire family out and just build like a compound.
The old compound.
Just build like a compound in Rancho Santa Fe or something where everybody's got like a house, and we just have you just take a golf cart to everybody's house, and there's obviously a pickleball court in the middle, but
Obviously. In the middle of the lake.
yeah, it'd be really cool to just have
Swamp.
the
Sorry,
whole
yeah.
family
Recreate the
there.
swamp.
Yeah. You guys don't know about the swamp life.
I mean, we saw a picture in the Discord, so swamp verified. Yeah, I don't know. Where are you at with this, EJ? Like, you look at these days left, and
Yeah.
You
So
know.
I read this article and I was struck with like the perspective that it immediately puts onto you. But I also thought that like that's just a tool, right? Like you can have that perspective without that tool, right? You were mentioning how you kind of like just meditate on this stuff outside of having that chart in front of you every day.
yeah,
And I feel like that same way. And I think earlier this year, I lost my grandmother, and we talked about that, and like I am left with nothing but like a full heart there. Like I felt like I saw her so sufficiently, I guess. Like I'm just like so happy with our dynamic, and even if it was like, only 10% left, I feel like I got it. I'm good. Like I'm not left wanting. Another part of me is thinking like, I don't know, like another thing that I've been grappling with is like all of these things matter, right? This guy talked about how many Red Sox games he could see. Like he talked about like family and everything, right?
Yep.
And what I think about personally is I feel like this is a personal need of mine, but this is like how I spend my time often, where it's like I work out, I spend time with friends, I socialize, but then I also do this like me time version of whatever I'm doing, which is like probably playing fucking FIFA by myself. And that has an opportunity cost. I think about this. Like as I like look at myself, I'm like, what the fuck? Why am I spending my time doing this? I know that I enjoy it, right? Like I get some joy out of it, but it's like a fucking 5.5 out of 10 or something. And there's like way more enjoyable activities to do than that. But like that is important to me also in a weird way, like as a recharge or something.
Mm-hmm.
And I've like been grappling with like, can I just eliminate the recharge and just like spend all my time in like doing sort of like high value things? Can I recharge just like with grandma before she passes or something? Like, this is what I wonder, with like our remaining time. But like, I know that in the core of me, I really do like that sort of alone time as well, even though it's not as like high value if I were to rate it.
that's interesting, dude. I could be totally wrong here, but I feel like your experience with the dopamine detox shows that you can't, that actually it's integral to you. And I think where you suffered the most was that was removed from you, your ability to have self-exploration, rejuvenation, time with these things that maybe are a 5.5, but actually pretty necessary for you to function well as a person.
I think
Am
of it
I even close?
I think of it as like that's how I recharge my personal iPhone. It's
Yeah.
like that's plugging the battery back in. It's a 5.5. Let
So
it
maybe
be.
it is necessary, and
I don't know.
we
But
all need different things to like function well and show up for others, right? So I think maybe that's your version of that.
yeah.
Yeah. What about you? Did you have your say on this? Do you feel?
Yeah, I mean it's tough. Like I think out of the four of us, I'm the only one who's like lost 2 out of 3 like immediate family members. So I don't think I'll ever be ready to like maybe talk about that, especially in this context. But it does remind me of this. We talk about like investing in money a lot, and it reminds me of the book like Die with Zero, and it talks about how the money that you could spend early on in your life, to bring family members together. Like you can make an argument, Stephen, that like if you used all of your money now, like literally all of it to make that happen, that you would have a better ROI off it. Because there is only like a certain stage of life where you can do certain things, and like you're at one of those stages where like that opportunity only exists now. It doesn't exist later in life. And so what I've tried to do is just be a little more free with like spending money that's like doing trips or getting family together. And I think that's where I'm.
Yeah, that book seemed to have been very impactful for you.
It made a lot of sense because
Made
like
sense, right? And it
Yeah.
also like helped shape your personal algorithm, right? In a sense where I think you've had these really great ways of approaching your investing and your portfolio, and then all of a sudden there was like this new information introduced that sort of shaped the algorithm to pull some of these goals into the present and bring some of these experiences into the you're like, I'm young, but like maybe I do deserve to do these things and give these things earlier than I thought.
Yeah, it's funny because like we talk about like how we record our expenses, and I have my personal balance sheet, and the balance sheet ends in the number that it ends in is investable cash, like to invest in to keep growing more money. And before that was like the precious dollars. Like, do not spend more than you need to because you don't want that number to go down. And a thing I think I've come to grips with is like, it's okay if you use those for experience points. Like actually, in fact, that's a better use of the money than, putting it in an investment vehicle to compound over the next 30 years, because in 30 years, you won't be able to use that money for these experience points, whether that's with, immediate family or others. Yeah. And you've talked about it in the past too, like creating like memorable moments, these like golden moments, like almost being like a activity coordinator for your family and like trying to manufacture these like experiences, whether it's like at home or travel, or even with friends too. Like you used your bachelor party as an excuse to get everyone, together on like a 2-week trip to New Zealand, and otherwise we probably wouldn't have done that. And that's like one of my top memories and experiences that I think I've had. So and thinking about Tim Urban's chart, like how many of those do we have left?
Oh my God.
Fucking one?
I thought we could pull one off every year or two.
No, but like
It's been 5 years or something since.
I'm
so.
in.
Yeah,
I didn't get to go.
So we
I
have
didn't know you
we have a
existed
book club in our Discord. We have a book club in our Discord, and Tunsky said maybe that should be our next book in our.
Which one?
Die with Zero.
It's
should
such a
be our next
fast
one.
read.
I think a lot of people read it, but yeah, it's a great one.
Because I haven't read it, and I would be interested in
okay, great. I haven't.
discussing
And
that.
I would say like 80% of the book is fucking spot on. And it's 20%, he like offers some like
Sure.
investment advice. He's like annuities, this, and I'm like, okay, skip that chapter. And like, which I think you should do with any book. Like just
Yeah.
skip the shit that you don't like
Yeah.
and just get to what you care about.
I feel like I kind of want to take our book club in a different direction. I kind of want to do like the ADD book club, where like
Okay, I'm back in because I don't like the dedicated one book at a time shit. I'm not in for that.
Okay, I
didn't love the last book.
Yeah, I didn't. Just didn't speak to me, and I have
Didn't speak to me
such
either.
a hard time devoting my
I have
energy to
book
stuff
ADD.
that like anything in life that like I
Yes.
don't, like I haven't.
But how do you coordinate a bunch of books with a bunch of people?
No.
Like, how do you do-
So here's the idea. I very much subscribe to this idea that like most books could be blog posts, right?
Oh,
And-
most nonfiction books.
Yeah.
Absolutely can.
Right. So I
Yeah.
think we can take books like this and like make people understand that like, look, you don't have to read the whole book. let's just collectively understand the gist of what the book is about and just talk about that. And then we'll move on to the next book. And I feel like it would be better to do that with 4 books in a month rather than to like trod through
every chapter
one
and
book,
talk about the pros.
because it's mostly, let's
Dude.
be honest, every book is just filling up space.
I totally agree.
And I would
Like that's how
much
I felt
prefer
about
that.
the last book, is that it was just filler.
Which book was it?
It's called The Soul,
Soul
of
of
Money.
Money.
And I just felt like the point of the book could have been still distilled into 2 chapters, but because the person got a book deal and they needed to write 280 pages, they had to fill up a lot of space with stories and anecdotes, which, by the way, as a person who's been in that world, I understand what they ask you to do, and that's necessary. And I find that most books don't need to be that long. They could be like 50 pages or 100 pages. Now, there are exceptions to this, of course.
Yes.
Like there are crazy exceptions to this, like The Rational Optimist or some of these. And that book's even longer than it needs to be. But there are some greats out there. And I tend to lean...
every Thomas Sowell book.
Yeah. I personally, my rule is to read the older books, the books that are at least 5 years old and aren't just books that are trying to be on the bestseller list in recent times and don't have like any fuel of marketing behind them, because they're perennial for a reason. They still continue to be referred through word of mouth. So I'm in for this version of the
We
book.
may only have
Good.
200. If you read 5 books a year, you may only have 250 books.
Well, you got to
to
pump
read in
those
your life.
numbers up, brother.
Pump those numbers. We
You
need
got to pump
1,000
those
books.
numbers. That is one of the saddest moments I've ever had when I realized how few books I have left. Yeah.
In your
I
life.
remember when I first read that. Yeah.
Wait, have you guys ever used Blinkist?
I have had it for years.
Yeah.
It's great.
It.
we
I.
could just do Blinkist summary.
Blinkist
yeah.
book club? Yeah, I mean,
Yeah, Blinkist book club.
Yeah, I don't know. For the books that
Sponsorship,
you've read, I went back and looked at the Blinkist summary, and I'm like,
No, it's not the
Yeah,
same. No, it's not the same.
it-
you should go to the actual
Blinkist
book.
is not deep enough.
But I
No,
do
it's not
believe
deep
in
enough.
looking at the table of contents, and like you don't like a chapter, fucking skip it. Just
Yeah.
move on. You don't have to read a book cover to cover.
Exactly.
Blinkist is really good to get an idea of something that you want to go deeper
Discovery.
into. Yeah, it's
Exactly.
really good for top of
Exactly.
funnel.
Exactly. Yeah, and for those that don't know in the community, if you're not in our Discord, obviously get in the Discord, alfalfapod.com. But it's a thread. So if you click on the threads channel, the book club is one of the threads.
Yes.
That's how you find access to
It's
it.
called
Yes.
Novel Thinkers.
Novel Thinkers
Yeah.
book club.
We should
Yeah, we
probably
have
call it
all kinds
book
of
club.
threads that are little secret Easter eggs
Yeah.
in the Discord. But yeah, if you click on the like pound or hashtag sign in a channel, you'll find more threads. Like the Novel Thinkers book club one is under the lounge.
Yeah.
There's a startups under the money magic lines, which Steven hosts in the thread under the money channel. I host a little mailbox money thread in there. And under life, there's wellness, daily gratitude, tech talk. There's all kinds of little Easter eggs in there. So yeah, go deep.
Yeah, I'm all for ADD with books. Variety and skipping around in the book. That was something I picked up from, I think it was the book Mastery, was talking about like how Da Vinci and all these guys used to read, is like they would just keep one main notebook, one central hub for their notes, but they would allow themselves to go across all different types of books and resources and jump around and have the freedom to explore chapter to like look at a table of contents and just be like, yeah, that chapter resonates with me today. I'm just going to jump into that one out of order. Like, why not? Like, why not have the freedom to learn that way?
That's exactly.
It's very empowering.
That's exactly how
as
I've
someone-
been approaching trading.
Dude,
Actually,
as someone who like would only read books front to back and had to complete them before moving on to the next one, yeah,
There
it's
is a
very
bit of an
freeing.
OCD element to it where you're like, no, I started and now
I
I'm
know.
committed. I want to finish. Like,
But like, life's too short to read shitty books,
yeah.
you know. So, yeah.
I agree.
All right. Anything else to wrap that up?
Feel
okay. I'd
good.
be very curious
Good
what
thoughts.
everyone out there in the community thinks about the Tim Urban Wait But Why article. I think it's profound. It's special. Please hit the Life channel with that. Tyler Lilly, yeah, skipping chapters gives me anxiety. I'm telling you, dude, the first time you skip, you'll never be the same again.
It's
Takes
like
one skip.
yeah. Once you
It takes
start
one
doing
skip.
it, you're like, oh, it feels so
No,
wrong at
I
first,
know.
and then
yeah,
once you get over it,
yeah, you feel like you're cheating
it's-
on the book. But
oh, it's amazing. It's just
Calcium
so freeing.
3.5x speeds the soul of money, which basically means he didn't read it.
3.5x.
3.5x.
3.5x. I wonder what I sound like at
I just
3.5x. No, this is a really phenomenal conversation. Guys, it took 157 episodes to find our groove. I think we finally found it.
I think
No, I'm
so.
just
I like the
kidding.
money
It's been
meeting
great.
groove.
I like the corners.
corner, magic
Yeah.
lines, little mailbox corner,
I loved it.
mailbox money corner.
It's phenomenal.
Yeah.
Steven, are you pleased?
Yeah, I ramble too much about the.
No, but
melt-up,
are you pleased,
like,
sir?
Other than that, I'm.
No, I don't think you did.
I feel like I talk
Steven's
too much.
never satisfied.
Yeah, that's okay. We'll keep going.
I think we'll keep going.
We'll keep going for that reason,
We'll
to
keep making it
satisfy
better.
Steven. Thank you all for joining. We'll see you next week. I will not be here, so
Wait,
have fun,
well,
guys.
maybe
Well,
not
none of
next
us will be
week.
here
Whoa,
next week.
excuse me. Okay, so we're gonna do a new episode for everybody. Tipsy Talk throwback. That's
We'll find a
find a
throwback.
good
It's
one.
probably audio only.
I'm still
Yeah.
clinging to the hope that we can make something happen from Austin.
Same.
I know
Please.
do
it's-
it and then give people.
I
2
know it's
episodes.
low probability, but
Dude, I would love an
Record
episode.
something with
Come on.
David and our Alfalfa party house.
Record something with.
Wait,
What do
how-
you mean we're
wait, when
gonna
are-
be
when are
on
you
a
leaving?
flight?
You're leaving Wednesday?
No, you can record it whenever.
Well, Steven hasn't got his flights, but like we're gonna be on an
No,
airplane.
we should record something Monday or Tuesday and release it. We'll figure something out.
Yeah.
We'll improvise
I
something.
like that too.
By we, do you mean?
I'll do it.
Oh,
I'll
like
do
that
it.
too.
Oh God, I've had too much to drink.
Oh, jeez.
I rescind that
Fuck it,
responsibility. I'm gonna need
heard
your
it. It's
Zoom
recorded.
mic and stuff.
We're locked in.
Just give me the equipment. I'll figure it out.
Oh yeah, the easy part.
All right.
You guys, FOMO is real. Next week. Have fun, everybody.